I have two very important announcements to make that you must know before watching this AMA. First, this is my AMA with Nicolin Decker from the Pulse DeFi. As many of you know, this is the same Nick Decker that donated $2,500 to our current fundraiser as a donor match. And I just want to say thank you, Nick, for your generosity and support of Karma Farm Sanctuary. I appreciate it so much, as does my community and all of the animals here. All right, announcement number 2. Wave 1 of the Pulse DeFi sold out a day or two after this AMA was recorded. So keep that in mind as you watch this AMA. Wave 2 is currently on sale at a slightly higher price point, and they are selling fast. There are a limited amount available. The performance on these has been incredible. Check the Telegram announcements channel to see the monthly returns so far. Enjoy the show. Hey everybody, it's Alex here, and on today's episode of the YaBonks Show, I have a very special guest with me today that I've probably spoken with for over 10 hours on video calls already. My good friend Nicolin Decker from the Pulse DeFi. And the Pulse DeFi is a software development company that specializes in creating decentralized, custom algorithmic trading bots that are able to pass prop firm requirements to allow users to quickly gain access to a large amount of prop firm liquidity to dramatically increase their potential trading profits. And I'm really excited to dive into this one. So, Nick, would you like to say hi to the audience and introduce yourself?
Absolutely. I am glad to have spent the last 11 hours with you, Alex. And in totality, we've had a great time talking about, everything from God to family to the cows, the back field, the cattle, and just agriculture, everything. We've had a great time. I'm excited to be here. I'm from Tulsa, Oklahoma, and I'm a cowboy, which means I mean what I say and say what I mean. That's just how we roll. But thank you for hosting me, Alex. I really, from the bottom of my heart, appreciate it. So,
it's my pleasure, Nick. Really, thank you so much for taking so much time preparing for this AMA with me and being so thorough with my due diligence process and so forth, coming with all this information. You're one of the most doxed founders out here that I know. You're well known in the space. You run multiple companies, and you're a really fun guy to talk with. Now, before we get too off track, can you give me a high-level overview or elevator pitch of the Pulse DeFi?
Yeah, absolutely. Okay, so the Pulse DeFi is an algorithmic trading bot. Our company constructs unique bots. And so, for example, last month, each bot on average for the funded bots, the stat came out was $2,247.82 per pin holder, per individual. And that was a 44.92% return on the initial investment of the construction of the bot. And so that is how we roll with. Really, it's a conservative number in the beginning. So if you carry through with this, we can explain it all and just dive down and peel it layer by layer.
That is amazing. You said how much? $2,249?
$2,242.82.
And that's since when?
So we launched the Pulse to the public, not the beta group. Right. To the public, starting with James Pelton's channel on the 28th of December. So,
okay.
And what is today's date?
February 5th.
February 5th. So, that's what we had right there. So, yeah.
It's a little over a month. And it's already done $2,242.82 per user, and that's approximately 44% on return on their initial investment so far, which is absolutely mind-boggling and super cool. And the way you're doing this is something that I think is amazing. I think prop firms are something everybody should know more about, because it allows you to essentially trade with other people's money and really lowers your risk exposure while dramatically increasing your potential rewards. Now, before we start diving into all of that, Nick, do you have any updates or news or special announcements that you want to let the audience know about before we dive into this? Now, I know that was some huge news right there.
That was some huge news right there. Yeah. So I mean, we're excited, and our beta users are even growing their prop firms. We have more pin holders like existing pin holders that are expanding their accounts, buying more pins. So we're growing by leaps and bounds, and we're excited to bring this type of product to your community, Alex. And again, thank you for opening it up to me and to the Pulse team. And so super excited. Thank you again.
It's my pleasure to have you here. And just for those who don't understand, I know I asked you for that elevator pitch earlier, and could you give me another just quick highlight? Like, what is your business model from a high level? How did you guys generate that $2,242 per user in just a little over a month? Well, what's your business?
Absolutely. Model? Okay. Yeah. So the business model, we build out custom algorithmic trading bots that conform or work within a prop firm's, another person or another entity's trading pool, completely legit in the United States. They're legal.
Right.
And so, but we have built out a trading bot that only on average generates 1 to 2.5% a month. However, your fixed amount of the cost, which is 5,000 USDC, EP20 or on the Binance chain, it generates off of that $200,000 prop firm pool, which we pass for you, the team does, and then we attach that bot. So 1 to 2% a month generates that amount. Does that make sense with how I'm presenting that?
Yeah. So if I understand this correctly, you and your team build custom trading bots for users, and those trading bots qualify for the prop firm requirements to unlock approximately $200,000 of liquidity per user. So a user puts in $5,000, which goes to building the bot and everything, getting this all set up. And then that gives them access to essentially 40 times that amount in liquidity that the bot will be able to trade with. And generally, the bots make 1 to 2% return per month, approximately. And, if you have 40 times the amount of capital to trade with, let's just say you make 40 times the amount in profits, then that 1 to 2% of profits become 20 to 40% of profits in 1 month. And that's the beauty of prop firm trading. And there are so many questions here that we can unpack this with for people who are not familiar with prop firm trading, and especially the way that you've tackled this using custom trading bots, which is, I think, a very unique way to do this. So yeah, did I understand all that correctly?
You understood it exactly right. So
okay,
lowest common denominator, you're using other people's money to make money off of a fixed amount instead of just pouring in money into DeFi project after DeFi project after DeFi project. It's a fixed amount using a pool that is completely legal, completely legit, and with a conservative bot.
Awesome. And I've talked about prop firm trading on other AMAs in the past, and also on my live show. I talk about them all the time. My good friend Austin Clark, he is a prop firm trader. He documented his whole process of getting qualified by a prop firm, and it's an arduous process generally. you really have to be a good trader with good practices, and you have to prove that over a certain amount of time with a track record. And a lot of times people it's too much of a hurdle for them to overcome, or they're not good enough traders, or too emotional, whatever. Or the entry, the minimum amount they don't have, because it can cost a lot of money sometimes to even walk in the door for a prop firm. Is that correct?
That is correct, yes. And so what we do is we have a specialized prop firm passing team that we use, and primarily what they use is one of our bots to pass it. Now, those are known as high-frequency trading bots, typically. So they can pass these tests very quickly, and as of this date, we have had a 100% passing rate with these bots, because it's not human emotion. It's not, they're set very conservative to stay within the challenges restrictions, and we move along quite quickly. So everything is done in a very streamlined and efficient manner with the team.
That is amazing. And is that common? Like, I haven't heard of any other companies doing anything like this before. And I've done a lot of research on prop firms and DeFi projects, for instance, even though I know that you're a software development company, but I've been involved in researching DeFi projects that had traders on their team that used the project's funds to do prop firm trading with their qualified prop firm trader on the team, and then the profits they would then distribute back to holders of a token of some kind or whatever. Is this completely different from this? Because there's no person trading. This is a bot.
Correct, and that's absolutely right. So there is no manual trading whatsoever involved in this. In fact, it would be statistically impossible with the amount of pin holders to do manual trading, because it is a unique custom bot that is built out. That is what the 5,000 USDC is for. It is to build out a unique custom algorithmic trading bot, and then which is 100% transparent to everyone, because you can see the trades on your dashboard. And the fact of how it is provable that it's not manual trading is because prop firms, I'll say about 95% of prop firms don't allow copy trading. So for what people don't know what copy trading is that's where there's like an API key or something that copies a manual trader. Now, if you have a bunch of different accounts in a prop firm that are all showing the same trades, the prop firm will automatically detect all those same trades, flag those accounts, and kick them out of the prop firm. So each bot is algorithmically unique to run in a unique way, so that it conforms. It keeps everything we do is an equitable exchange. So it's a win for the prop firm, it's a win for the pin holder, and it's a win for the team. So we're all working together to make this a equitable exchange as we're building out something custom tailored for the client.
Very cool. So is there a limit to how many custom bots that you can make that meet all these requirements and that perform within that 1% to 2% range that you guys are shooting for? Is there an infinite variation of these that you can do, or do you guys have a limit?
Yeah. Okay. So because we want to make it easily accessible to everyone, we have a limitation of 6 bots per wallet per person. And there's a reason why there's 6. A limitation of 6 is because whenever there's a bot built out and you go have a prop firm that you select, you have to KYC with that prop firm specifically. Then so think about it this way: is your bot is built out, and then when you go get the prop firm and you sign up for that prop firm, they say, hey, who are you? Let's see your driver's license, and like that. Mm-hmm. And so then that bot is specifically, the end phase of that is paired to those custom restrictions or design of that prop firm. And so it works specifically with that. Now, there's only so many limits. Like you can only get with some of them, you can only get a $200,000 funded account. So some of them you can get more, but we have a list, and we're like, okay, to keep in our diversification model to where we're continually rotating those lists, we want to make sure that there's each wallet only on average has the ability to have 6 pins max. Now, that's not to say we have had people approach us to custom build 50 bots all at once. We have an overseas individual that has requested that. And in that specific scenario, we have to work with them hand in hand, even more so, to make sure everything is unique, that it's not going to damage the prop firm. It is very unique to set it where we have to dive in more time with that. So the answer is anything. Most people just will pick up 6, but then beyond that, it's a custom order where we have the team sit down and we work through everything. I mean, we're looking at every single diversification model, and we bring in another wave of prop firms to make sure that it's not over leveraged, but not overextended in one area. We want to make sure it's well spread out. So I hope that answers your question there, Alex.
It does. And
good. No.
Approximately how many prop firms are you working with at any time?
Right. So with the first wave, we are running through 8 prop firms, and one of which I would get the questions asked like, hey, what prop firms do you have? And well, we don't typically share that because one, it's proprietary, but we can share one of the prop firms that we do work with is FTMO, which is a lot of people consider that like one of the grandfathers of prop firms out there. So we do work with FTMO. FTMO is a little bit of a unique prop firm. It's because it has to be done when it's passed. The bot has to simulate the interaction of a human. So they'll be ups, they'll be down, and it doesn't pass as quickly as the others. So let's put it that way.
Okay. So how long does it take for one of your bots that you custom build for a new user to get qualified and KYC'd and everything and approved by a prop firm?
Yeah, absolutely. So typically the way we have it set out is on average, the time right now is about a week and a half to 2 weeks, give or take. Again, under promising and over delivering, that's kind of what and provided the pin holder, they work, they're like, a lot of them times they'll go boom, 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 boom. Every step that we have, they are right there meeting with us. Then there are some pin holders that they're like, okay, I need to go on vacation, or I'm going to go see my Aunt Sally, and they'll come back a week later. You get what I'm saying? But if it's right on target and we're moving along, that's typically the turnaround time for everything except FTMO. FTMO, like I said, does take a little bit longer.
Okay, so if the user is quick, is responsive to your request for information and setting everything up with you guys, then it takes approximately 1 to 1.5 weeks to get approved by the prop firm, and for that user and their PIN, which is their placement identification number. Is that right?
Correct. Yes, on the contract. Yes.
So that gives them a slot in the Pulse DeFi contract, and that basically allows them to start earning returns and rewards from the prop firms trading with their custom bot strategy. How does and it's an interesting model, and I guess I want my audience to understand how does a user's bot function? Like, where does it exist, and how does it interact with this prop firm, and then how does that get sent back to the Pulse DeFi contract, which then everybody claims their rewards from? How does that work? Where does that live?
Okay, absolutely. So each bot has its own server that it runs on. So very unique server. The only thing that's sitting on that server is the bot. And so it is set up specifically on that server. So we have, let's put it this way, simply put out, we have a lot of servers that we run at any given moment. And so they have their own IP address. And so it is ran specifically and housed on that server that is dedicated to the pin holder's bot. So once we set it up and it's built and it's launched and it is running on a funded account, once the certain time frame is passed for a withdrawal from the prop firm, they will issue it out and it pays to the contract. And then from the contract, it is paid out in the native token of our, my mind just went blank there. Native token to the ecosystem, which is the Nexus token.
Right.
Yeah.
And
Nexus, so from
okay, go ahead, keep going.
Oh no, yeah. So the Nexus token is it is what's called an appreciating stable token. So it can never devalue whatsoever. It's just built that way. Mm-hmm. So you're not going to have these up and down movements. It's always going to be. In fact, the developer said, hey, your chart, your live chart, it's going to be a very boring chart because all it does is just go up.
Right.
And they were very emphatic about that. I was like, people are visual. They like a chart. But that's how it overall works.
And I'm very familiar with those types of tokens, the ever-appreciating stablecoin tokens that are backed in the contract itself with no actual liquidity pool. It's a very awesome thing. And I know, I know the developer who created it and all the variations of it that have come out. So I'm familiar with the contract. It's from everything I've seen over the years, rock solid in terms of security, and literally can only go up. It is built into the math. I've read the contract myself. Yeah. So.
Yeah. And the people that, if you want to look up the company, it's dApp, DAPPD. And DeFi Mark was the just absolutely genius, brilliant guy, great team all around. He designed and built what's known as the Surge token. And if anyone ever needs anything in the DeFi space built out, dApp is 110% the way to go.
Yeah, they're my favorite by far. I've worked with so many, I've worked probably over 100 different projects or companies out here, and everybody who has had anything developed by dApp has always had the highest recommendations about them. And Mark is a super genius through and through. So yeah, I'm glad you're working with dApp. That's a good choice. I didn't even have to tell you that. You came to me and worked with dApp. So that's good to know, man. I love them. And they, for my audience who have been following me for a long time, this is similar to MDB Plus token. And MDB Plus had a variation of the Surge token, of a Surge token, and it worked exactly how you said it does. I've seen it in the wild for a long time, and it's cool. And it's all, the appreciation is just based on transactional volume. So the more buys and sells, the more it just slowly goes up and up and up as it just stacks away a little bit more backing of the token in the contract with a stable coin like USDC, I'm guessing.
Right. Yes, that is the underlying asset or the backing asset is USDC, so it cannot fluctuate. Otherwise, if someone had picked BNB, it would be going up and down with the value of that token. So, I mean, it is truly an awesome. This one is basically the straight-on sister of XUSD. So it has all of the same, which is the OG.
That's the OG. Yeah.
That's the OG. And so this is like a mirror of that with a few extra features added onto it. And so it is not a pared down or it's not a diluted one. It has the full features to expand on just like that. So this should be a really awesome ride with this token. And we're excited to have it in our ecosystem. Yeah.
Very cool. And I'm glad you explained the Nexus token and what it is, because a lot of people might be listening to this and be like, oh no, they're paying out in a native token of some kind. And then they might be concerned of somebody dumping tokens later and devaluing their rewards and profits. But in this situation, that's not the case and not possible. Is that correct to say?
Right. It's like, okay, so think about this. It's the person that holds the token the very last wins, because if everyone dumped, it would skyrocket the price up. So the value just keeps increasing. And even so, on this one, these types of tokens have a special security feature, and I would call it a security feature. It is called price rises. I'm trying to think of that functionality. And basically what it means, if someone tries to exploit the contract, they cannot, because they have to have the equal amount or greater to pull any money out. So the contract cannot be exploited. It would just nullify that transaction. I mean, it's truly one of the most awesome features in all of the smart contract history. Is that feature alone, and that is built into the contract. So this token, when I say it's unique, it is very much like its sister XUSD.
Right. And that security feature is brilliant because it's based on mathematics. Literally, the logic in there is if this transaction is going to decrease the value of the Nexus token, for instance, in this case, or MDB Plus or XUSD, if it's going to drop the price, then revert transaction. And that literally means there's no way you can take funds out of this to make the price ever go down. The price has to keep going up based on the math, which I think is super cool. And it's been in the wild now for years in multiple forms, and it's a great strategy. Especially, I've been thinking, like, why don't you guys just pay out in like the USDC? Why go with a surge token like Nexus token? What would your explanation be strategically from a business perspective?
Absolutely, strategically. So initially, when we are a very compliant company. So we do our best to, and everywhere we have a law firm behind us. They do the research, all the good stuff with that. So something to understand about the Nexus token is it is the centerpiece of the entire ecosystem. So it is not just the pulse that it's going to off. It's the fund, the founders. I mean, you've got the vault. Everything is coming down and pouring into this. And so initially the concept was, whenever we were deciding on what to pay out, we noticed that the SEC was targeting DeFi platforms that were based on a stable token. And so got together with the team. They're like, hey, well, we actually have this token, and it's called SUSD, and we can build you out one to your specific requirements. And so we did. But not only that, but that was one aspect of it. But the second aspect of it is why we launched the Pulse first, is because you're using prop firms' money to pour into the Nexus contract, which will then spike up the price. And so you're using other people's money in a liquidity pool of, say there's 100 pins. That's $20 million in prop firm funding pouring into the Nexus token contract, shooting that up, and it's just going to blow up that price like you couldn't believe. And so we're super excited, but that is the ultimate reason why we designed it this way. It was very strategic. The team is behind this. We're chess players, we're geeks, we're nerds. We work hard, we play hard. We love this stuff. We eat it up day in, day out. But we have a complete design by step on why we're doing something, how we're doing it, and how to be compliant in everything we do to make it long lasting and long term.
I think that's actually really smart to use all of this capital that you unlock through the prop firms and essentially multiplying your volume by 40x that you can push through a surge token, which, worst case scenario, even if there's not much volume going through, you're not losing anything. It's just stable, right? If you're taking your profits and you're taking your Nexus token and swapping it for the USDC, worst case scenario, it's stable or just going up very slowly, which to me, I don't care. To me, it's a stable token. But if you have a bunch of Nexus tokens sitting there accruing in your rewards or in your wallet, and you haven't swapped them for the USDC yet. And all of a sudden, all the rewards from the prop firms, from everybody's bots, are coming in Nexus tokens, which is making buy pressure on it and then sell pressure on it. All of a sudden, that token, could just be going up in value. And then the tokens you've sat on, you might get a couple extra percent that you might not have had in the first place, which I think acts as a good protection potentially against inflation of the US dollar, and also give you potentially extra gains above that. Is that accurate to say?
That is accurate to say, because that's absolutely right. Because buys are algorithmic and sells are exponential. That's how the math is worked out in this specific token. And that is a very, very good point, because if you go over to the swapper real quick, I just want to show you, like, last Thursday, which was that 4 days ago now, Alex, is that right? So
yeah, I think so.
Approximately 4 days, 5 days, something like that. It's actually gone up with just the minor transactions that has happened. What is that? 1.485% gain in value. So yeah, it is something that we are extremely excited about, because and we designed it specifically this way just to have that extra edge to beat out inflation, or also known as the stealth tax in the economy. So yeah, this is something that's just going to be truly, truly exciting to see.
Very cool. And normally I would say I don't like this kind of thing, but since you went with Mark's XUSD contract to make the Nexus contract, I think it's a great idea, because I know how secure it is. At least it has been in the wild for years, has not been exploited, and it functions very well. Especially if you have volume, this thing kicks ass.
Oh yeah. I mean, this is why, like my AMA with Jimmy, James Pelton, it was
Jimmy.
It was actually Jimmy, labeled the evolution of Bitcoin. It's like, the Nexus token, when you think about it, it's like, hey, Bitcoin didn't have anything to back it per se. It's all based on supply and demand. This is based on supply and demand, but has an underlying value at USDC and so it can't go down. So all you're going to see is the most boring chart of just skyrocketing this way. And you're not going to be led by FOMO or anything like that. This is going to be, it is that next evolution of Bitcoin. And the great thing about this is I've actually had people buy pins saying, they go, hey, Nick, I had one guy say, I'm going to buy 6 pins. I don't need the money right now. I'm just going to let it dump into the contract. And I've just got all this Nexus building up while everyone else is just selling off their Nexus. This is like I'm going to use this like as part of my retirement account. I was like, that's actually a really good idea. And you get these, it's amazing. Your community, they bring in such great ideas that sometimes you don't even think about yourself. And so we've just got people left and right coming up with great ideas to improve on what we're building here.
I think it's very cool and interesting analogies you used there. I wouldn't say it's the next evolution of Bitcoin, because, it's got the decentralization with, nodes and everywhere and all that. Totally.
It's a bold statement.
It's a very bold statement. It's catchy. And I'm sorry for nitpicking as a super nerd engineer and everything, but it is catchy. And I see what you mean with that. And by the way, everybody go watch James Pelton's video here. It's really, really great. He also did a great video with Nick over here called Pulse, the bot, something. I've watched both of these. They're great. I also watched Pocket Aces. His AMA with you is excellent. And same with Crypto Andy. All of these are jam-packed full of amazing information. Such good questions were asked in these. So if you're trying to learn about the Pulse,
DeFi and also the Nexus token and how it all works, watch as many videos as you can. Do your own research. There is a plethora of information here to pour through.
Yeah. And actually, I encourage anyone before buying to do all of your research and including watching these videos, because you will learn something every time from each one of these.
Absolutely. And I also love that you guys are just like very upfront with all of your disclaimers for risk and responsibility and compliance right on the website. So we don't see enough of this out here in the DeFi space. And I'm glad that you guys are doing your best effort, it appears, to do everything by the book. And everything that you've sent me during my due diligence process was way above and beyond what anybody sends me. So thanks, man. Like I got biometrics over here. Like Nick's like, here's my biometric data. And I'm just like, all right. And he's like, and I'm like, that could be a paid actor's hand. I don't know. And then he sent me this.
And I was like, there we go. Yep. So now you know that's actually me. Yeah.
Yeah. So hey, I mean, I've gone through his passport, driver's license. I've gone through the company's articles of incorporation, their operating agreements, their FEIN number, and I went through so much stuff. It's hard to remember every thing I've seen. I've gone through your insurance agreements with the insurance companies. You sent me so much stuff that I really appreciate. It saves me a ton of time. And yeah, it's great. So, thanks for sending me so much stuff, man. Normally I have to fight tooth and nail for that. And I always appreciate it when somebody's just like, here's everything you asked for, plus here, let me send you a whole bunch of other stuff. Now, obviously I'm in a special situation where I've got confidentiality agreements in place. And so I'm privy to a lot of this information that, I request before I bring somebody onto my show. Generally, I try to at least. And when they do, I like to make a big deal about it because, I'm trying to do my own research too. And that really helps me.
Yeah. And well, and to that point, I believe it was with Pocket that I was talking about, or no, it was Crypto Andy. He and I were having this conversation. I can't remember if it was on air, off air, whatever. But I was like, the entire space, that's why we're building the ecosystem the way we are, is to set a precedent that every other community should be this way, should be transparent, should be visible, should try to stay above board. Don't try to fly under the radar and try to make things look good for 6 to 12 months, then you go out. No, you're building something to be an equitable exchange and be long-term. I mean, if you're going to do something, do it right the first time or don't get involved. I mean, put some skin in the game. That's how this space should operate, and that's how it will operate going forward, by leading example in this manner. That's my soapbox. I'll step off now. Go ahead.
I agree, and I talk about that all the time, especially with my friends like Pocket Aces. We're always wishing that more people would be courageous enough to work in this space, doxed, at least KYC'd by a reputable company or multiple companies, and to operate above board, at least to give their best effort to not be like malicious with like fraud or scams or anything like that. Because we're all out here at the end of the day trying our best to figure this stuff out. So when I come across a company like yours that has all your ducks in a row and you're just as transparent as you could essentially get, I really appreciate it. And it makes it easy for me to say, yes, you can come on my channel, when I just said no to the last 30 projects or companies that I just couldn't bring them on, even if they threw all the money in the world at me. I'm like, no, something doesn't feel right. I need more information from you, and they won't give it. And then I'm just like, well, why not? Like, you guys know me. I have a great reputation out here. I don't share people's information with anybody. And then I have to wonder, well, they're probably up to something if they're operating in the shadows. Just my opinion, not always the case. Anyway, so I normally cover that stuff near the end of the video and my due diligence stuff, but it's such, you did such a, you were so forthcoming with everything. I just had to just make this joke here with the biometrics you sent me. Nobody's ever sent me their biometric data, by the way. I got his fingerprints and his retina. Like we got him, guys. We like I'm about to go through TSA TSA Pro or whatever, pretending to be you now. Put like your retinas over mine. Anyway, no. So I appreciate that, Nick. We need more people out here trying to build really great businesses, and to do so just like in the traditional world we're used to. So that way we know what options we have that are real businesses. Yes, there's always risk involved. Sure. That's like with any business or opportunity.
Right.
However, it really is a lot better when you have some standards in place.
Right. Yep. And like I said, we're very much about under promising and over delivering, and an equitable exchange for everyone, and just being transparent as possible so that people know what they're getting into. Doesn't mean that things are going to go right 100% of the time. And I will not guarantee that or never say that. It means that we are mitigated the risk as best as humanly possible on our side to come out with a product that people can buy and then turn around and be able to, like we've developed this for specifically, yes, 5,000 USDC. That's not an easy entry point for some people.
Right.
But we actually brought in a marketing strategist, and he said, because I was talking to him on the phone, and I was going over everything. We were, talking about the numbers, and he was looking at everything on the board as well. And he's like, okay, what's your competition? And we went over the competition, and I was like, all right, what's the price points? And I told him, and the next price point up from $5,000 is $20,000 for this type of bot.
Yes.
Then beyond that is $50,000. And
yeah, so getting involved in this kind of thing is not for the small investor. Generally, like you said, it's like, my understanding was it was like 50 grand minimum to even walk in the door for something like this. But you really cut that by a factor of 10.
Right. And this is what he would say. And he was like, well, you could raise the price more. And I was like, but that's the thing. I don't think that $20,000 and $50,000 is an equitable exchange for teachers, nurses, missionaries, people all over the world that could afford something like this, or they were interested. Whereas, like, if I listed it for $50,000, it wouldn't be something that someone could go out and afford. Then they wouldn't even be able to consider it, because $50,000, you can buy a Ford truck for that, or a nice Ford truck.
A new Ford truck, yeah.
A new Ford truck.
I'm over here I'm looking at 1991 Ford trucks. Those will run forever and have all the replacement parts in the world. Right. I'm trying to get one of those, and so I just need like 10 or 15 grand. But man, 50 grand is
yeah.
Let's that's
right. You're talking like one of the Raptors or something. Yeah.
Yeah. I agree, and I know I saw some questions come up about, well, why not charge more? Wouldn't you guys make more money? However, I thought about this a while. Correct me if I'm wrong, but you guys charge a 20% software subscription fee deducted from rewards to cover the maintenance, server costs, royalty fees, bot enhancements, and, probably team salaries, retained earnings, everything to build the business and keep it running. So if you're charging $5,000 or $50,000, it unlocks the same amount of capital that is traded through the platform either way for the user, and you are making 20% of those rewards regardless. So really the only additional expense for you in this is managing more customers, essentially. Am I right?
Right. Yes, the expense up front is the construction of the bot itself. That's where the majority of the cost is.
Yeah.
What the team actually, the subscription fee pays for all the expenses, and then pays for the team's salary to keep them going and everything like that. There is everyone's like, well, there's $5,000 up front. I've had that statement but I'm like, yes, but there's what goes into building it. There's very slim profitability margin there for us.
Yeah.
In that context. So the team, the subscription fee really does cover the team on the back end. It's when you talk about something that is decentralized, where you're making it available to everyone. This would be a decentralized aspect of what the $20,000 and $50,000 ones are doing. We just were able to create a way to where it was affordable to most everyone, and by comparison.
Yeah, and I like that, and I appreciate that, because this isn't technically a purely DeFi company or project or anything. Like, this is a centralized business. You guys are a software development firm, essentially, that uses aspects of blockchain technology to make for immutable, trustless documentation and distributions of rewards on the blockchain for everybody to see. And so at the end of the day, you guys are still a centralized entity, correct?
Correct. Yes, absolutely. We are registered in the state of Oklahoma, and which we provided those docs to Alex along with our operating agreement. We are insured. We have an attorney that represents us. We are the whole 9 yards when it comes to a legitimate company, and we are registered as a software development company with an emphasis on AI technology. And so that is what we are. You are correct. We are a centralized legal company formed in the state of Oklahoma.
Yep. And it's registered under the name of the company here. Like, if you wanted to do your own research, just look up the pulse. It's that easy. That's what I do when I do my own due diligence. But he made my job easy and just sent it to me. But you can look it up yourself. These guys are, as doxed as it gets out here, running a, publicly registered, well, not publicly registered, but you're running a private company that's registered in a way that you can publicly verify in the state of Oklahoma. And that means that you guys are, under the public scrutiny, as well as the scrutiny from the law in the United States, which is very tricky out here. And I'm glad to see you guys going forth, putting in the effort to navigate that situation in a way that allows you to do this, and also to incorporate DeFi stuff, because your whole ecosystem kind of has all those elements into it. How hard was it for you guys to fit this within a legal framework that works in the United States?
So the attorney that we use, his law firm, specializes in securities, and so he's also the one that we have, like I mentioned, the fund earlier. He is the attorney that filed for the VC filings with the SEC for them, and whenever we launch the company in the DeFi space, we make sure that we can conform to the rules surrounding that aspect. And so there's what's an exploratory and investigative phase to every construction of every company we do that is going to be utilized in the DeFi space. Not all my companies are in the DeFi space or have that TradFi DeFi hybrid aspect, but the ones that do, we make sure that we are very careful on how we proceed. And so the exploratory phase was about a month and a half long in totality to bring this along. And so the research and he's one of those. You'll have to, whenever you come through Oklahoma, I'll introduce you to the attorney. He's very like one of those brilliant off the chart guys, but a very kind of calm demeanor, like, well, have you considered this? And half the time I'm like, you're the attorney. You tell me, because if for those whenever you hire an attorney, you're basically paying them to tell you no until you get it right. And then they'll say, yeah, that'll work. And that's basically what we do is we just keep bringing them the potential solution to a challenge until they say, yes, that will work. And so that's what we had, for about a month and a half in totality was how we went through that investigative or exploratory phase of the Pulse.
Yeah, and I know what you mean, especially when it comes to anything related to blockchain technology, DeFi and stuff. A lot of lawyers, nobody knows, right? It's regulatory issues are very confusing out here. So you have to make a proposal. Would this work? And then they can analyze it based on the jurisdiction and the business model with the current legal framework and say, yeah, that should work, or no, you might get caught up here, or here, change these things, right?
Right. And like, that was a very good point you just brought up there, Alex. It's like, yes, the regulatory framework in the U.S. changes almost like, not on a daily basis, but almost like an hourly basis. If you went and asked one person at a regulatory agency, does this mean this? And then went right next to the office next door and asked that same question, you would get two different answers. But then if you went to the office next door to them, this same regulatory agency, you would get three different answers. And then it just keeps going. So no one has a clear, unless it's like a blatant, something blatant that would be under some already disclosed regulatory clause. You have to really dive in and do your research, and you have to be able to take that step out, pay for the attorney, pay for them to do the research, coordinate with the Dallas law firm, the Washington D.C. law firm, everything. Your networking, like we talked right before we got on. This is the space that we're in is very much a networking space.
Yes.
So, Alex, you have resources that I don't have, and I have resources that you don't have, but together it makes a stronger, more stable environment for everyone involved, or in other words, a more equitable exchange for everyone involved.
I agree. Networking is everything out here in this industry. It's a new and emerging space. Things are developing quickly. We are figuring things out as we go. And somebody's network or just meeting the right contact can open up a million new opportunities and potential avenues for a business to go that might not have been there otherwise. So I often, like I offered you, I share my network openly and freely. People tell me I need to charge for this kind of thing, but if I do my due diligence on someone and I think they're a good person and I like them, then I openly share my network with them, because I am trying to cultivate a network of good actors in the DeFi space, trying to build real things to give people real opportunities, so that way I can cover real stuff on our YouTube channel. Like, and it helps all of us. Like, it helps push this forward in a way that will make regulators look at this space more favorably and make regulation and laws that help us instead of hinder us, because this is pivotal to our economic growth for our country. And we don't want to be left in the dust. I know I don't. I don't want all these awesome businesses making billions of dollars to move overseas because this country might be more friendly towards blockchain and DeFi businesses, where over here it might not be as hospitable. And I love that you are putting in the effort to and the upfront cost to figure that stuff out for these businesses you are inventing.
Yeah. And like I said, it's just like the other, like the fund, which launches in March, which, Alex, I'm going to hit you up on again. to do an AMA on that. Yeah. Okay, so it's registered with the SEC. So trying to get a for a lack of a better word, a DeFi business registered by the SEC.
Yeah.
The exploratory phase on that alone, it was interesting. But then just getting registered with the SEC, it was, if anyone has ever seen John Wick, the latest one, John Wick 4, where he goes down the stairs over and over and over and over and over again, once he reaches all the way up and gets kicked all the way down, that is pretty much a very good semblance of what that journey is like in this space, is where you'll get to one point and you'll get kicked all the way down, but you keep on going, and eventually someone comes along the way and helps you up there, after about the third time you've been kicked all the way down that stairs. So it's very much a journey, and that I'm excited about. And it's not when blockchain technology takes over. It's not if, it's when. Like, banks are moving in that direction. Right. All of our contacts are like, they know that blockchain technology and Web3 products are taking over faster at a rate. And if they don't go with the times, they're going to be left out by their competitors. So they're coming to one of my venture capital companies to build out a blockchain, build out tech to run on it and everything. So we are more than just the Pulse. The Pulse is just one company that I own. And we are just, our heart and soul and our passion is in the DeFi Web3 space. I have extraordinary developers, extraordinary teams that are employed by me, and we're truly excited about the growth and the expansion of the blockchain sector.
I love your excitement for this space. I share that same enthusiasm. We are at the inflection point of that hockey stick graph of a new technology or sector emerging, which is blockchain. And it starts out here, and then all of a sudden it goes up exponentially, goes straight up, and then it evens back out and keeps going. And we are right where we are starting to go exponential, where all of a sudden everybody's on blockchain, everything's adopting it, everything's going parabolic. Like, we are living in that time right now, and you don't want to miss the boat. And tech companies and banks and all this don't want to miss the boat. They have to move or they become extinct.
Exactly.
It's like businesses when the internet took off. Yeah, you got to hop on, or it's going to be tricky for you to keep up. So,
right.
Yeah,
exactly.
I love entrepreneurs. I really do. That's why I do this. I'm an entrepreneur myself, and seeing something as cool and creative as the Pulse DeFi, it's really exciting to me, because I didn't have this opportunity before you existed. So you've actually created a new opportunity for somebody like me to get a bot to trade algorithmically for me using prop firm funding. And then basically I collect the rewards once a month and go on my way. Right?
Yeah. And that's exactly right. So it is, from the get-go, we work hand in hand with you. I can't say it's passive. I can say it's
right,
partially hands-off. Let's put it that way. We work with you. We help and we build out this custom bot for you. And it's just like with any piece of technology, there are updates that have to be done to make sure it doesn't go stale, like your iPhone. I love using that example because you get those little, hey, you need to update this. And so they do it for you. But of course, you pay a company to update your phone, like your cell phone carrier, whatnot. And that's how they also receive funds in the back end. Very similar in that manner. That's also why that subscription fee is in place there, is to make sure that it runs properly, runs smoothly. And because bots, some people think, bots are the greatest, latest thing. They are. Truly, they are. They're amazing because they take emotion out of it.
Right.
But really, what people don't understand is they have to be constantly maintained. Otherwise, they could go stale because the market changes. They have new highs, new lows. And so we have to upload new framework to it and to keep it going. And so very, very great technology. That's what the team behind the scenes is like, hey, we're keeping up with it. We're maintaining it. And so that's how we make this go long term. And because it's not the Nick Decker show or the Nicolin Decker show, it's a team, and that's how everything works in life.
I agree with a lot of what you said there, especially with trading bots. So I've been using trading bots in crypto since 2017. I've written my own bots. I'm a software engineer, as most people watching know. I've written all sorts of trading bots using like different APIs, like Binance's API just plugs into my account, trades for me, takes the emotion out. It's a really cool thing. I've also used all the pre-made bots like grid bots, arbitrage bots, things like that. And they generally do pretty well. Like, it's not mind melting result generally, but it takes the emotion out of it and helps me get more wins than losses. And that's what stacks up over time. So speaking of bots and strategies, in order to make this not a totally passive income situation, because obviously regulatory bodies frown upon that kind of thing, you require that the user or customer be a part of designing their own bot, right?
Correct. Yeah. So during this process, we work with everyone, and it depends on, I guess it depends on the lens that everyone sees it, or that perspective on how easy something is or how difficult it is. There's a lot of times where we have to, whenever someone selects their prop firm, we work with them hand in hand, and anyone will be able to see it. We keep it as streamlined as possible. And so whenever it's built out, it is built out according to make it unique. And so there's not another one like it. And it's what we call a lifetime lease, because it sits on the server that's held by the company to protect the IP and to protect anything from messing with the set files to disrupt that. Because and so the initial design or thought process of the Pulse was to design one where people could have hands-on. But as we dived into the marketing framework of it, we found out that one of the biggest flaws with people selling bots is because people didn't know how to run bots.
Yeah. They get wrecked in bots because they don't know. It's a very manual trading strategy still. It's not set and forget. Yeah. It's chart your entry and exit point, and then program your bot accordingly, and then get ready to turn your bot off if you go out of range. And it's very manual.
Yeah, and so whenever we're with these bots, that's why I said we have to keep coming in and updating the files, and activate them. And then whenever the market closes on the weekend, we go back in, and if we need to send a new update out or new files, we do that. But yeah, we work with the customer to build them out, and from there, most everyone is like, we've had someone that was like the third. What was it? We had maybe the second or third weekend. They came back and they were like, "Hey, I am doing phenomenally great." And I think this morning they followed back up with us, and they had like over $5,700 in 1 month off of their bot with a proper money. And it's crazy. Yeah. And I mean, granted, keep in mind that the way we've got this set up, which is outlined up there, but you're seeing he was over the moon, just like never seen something like it before. And I was like, that is awesome. I am so excited for him, and you get to see that joy, whatever, like, man, something in this space actually works. And
That's why it is so exciting for me, by the way.
Yeah.
I've seen the results the past few months. People have been talking about this, and I did, like, you guys are doxed out here with real business entities. So it's exciting. This thing is going to, when people start catching wind about this, like, you guys are going to probably run out of spaces with your prop firms pretty quickly.
Yeah, we are already contemplating on how to expand even more, and it has to be done very strategic and methodically to make sure that we don't want to overload or centralize on a singular prop firm.
Yes,
because that is not like I said, we rotate through those prop firm lists for everyone, and to make sure that it just, and as everything is moving forward, we stay on top of what is going to make it long-term and go longevity. Because remember, our profit comes from the back end, like that's where the subscription fee is.
Yeah.
So it doesn't make sense to build something up for great big hype, because we want it to go long term. That's where we are able to obtain our profit, is off of the subscription agreement.
Yes, and it's a great business model in terms of how you guys profit from this, is with that service fee that is based on the performance of the entire system combined. The aggregate of everybody's bots and rewards averaged out here, as you see. So what he alluded to earlier, that's on the screen for those who are just listening, the rewards, and correct me if I'm wrong, Nick. So every user, every pin holder, whatever their monthly rewards are from their trading bot with the prop firm, they all get added together and then divided by the total number of users or pin holders in the system. So in this case, the example has 3 pin holders, and they each made a different amount of profits from their bots. That gets totaled up to $3,704 in this random example, divided by 3, and then that means each person would get $1,234 approximately each, because it's averaged out over everybody. And I think that's also, at this point, clever, now that I think more about it, because that is another diversification strategy to reduce risk, not only to yourselves, but across the board. And since you guys profit from the performance of the overall system, it behooves you to diversify and reduce your risk as well, right?
Correct. And it is there to protect everyone involved, including ourselves.
Yeah.
Because a lot of people are like, what if they rug? This is a kind of a, what do you call that? A checks and balances type of system, to where, because the majority of what we make is on the back end, in that subscription agreement, it behooves us to make it go as long term, to keep our mindset on what can we do to make sure it's safe for the community, for the pin holders. And it's like, okay, we have what's called a morning huddle, where like about between 9:30 and 10 a.m. Central Standard Time every morning, we get and sit down for 30 minutes, and we all get on a call, and we go over everything. Like, hey, here's our hot list, here's our medium list, or our cold list, like, going down the list and what we need to take care of. And then we tackle it through the day to make sure that everyone is taken care of. And, and this is something I've mentioned on the other AMA, since we are a company, I tell the people, I was like, hey, customer service is a priority. I don't know about you, Alex, but I've said this in other AMAs. I have been where you wait on 2 or 3 hours on a phone with customer service, or you don't hear a response for days and you don't know if it's ever been accepted or something like that. When you send an email into the team, you'll get an automatic reply basically saying, hey, your email has been received. The team will contact you back within 1 business day. However, our current response time is between 1 to 3 business hours based on the volume that's coming in. You see what I'm saying? So it is very much a under promise and over deliver system. That is how we have it set up, because if someone is expecting a response within 1 business day, at least that's setting the expectation here. And then we try to come back and hit them up here. So like, that's what I want to see in my own customer service, So we do very much try to pride ourselves on taking care of a customer. Not saying it goes 100% every time, because that never happens in any company, in any situation.
Right.
But we have made that up front known that that's our priority, is our customers. So.
Yeah, I love that commitment to customer service and to under promising and over delivering, especially when it comes to that stuff. Letting people know, hey, we'll get back to you within a day. And then if you get back to them within an hour or two, that's just a great experience overall, especially for something out here where you don't have the time to know if you're talking to a real person or even somebody who's on the team, or like you can't get a hold of anybody because they're anonymous people on anonymous accounts and chat rooms. This is a much nicer situation. And like you and I, like I can literally just give you a call and be like, hey, a few people in my community are having an issue with the website or something. Just wanted to give you a heads up. Like that's how open your open door your policy is. And I've also heard that you are doing like daily or weekly meetings, opening your door to customers as well. Is that right?
Yeah. So if you go to the Polson's website for a second here, Alex. So if you scroll down to the bottom, there's go up just one more, and the sexy photo. Go up to the sexy. See, there's my sexy photo. Okay, so now go down just a bit. So there's a quick bio, but then right there's book a meeting.
Yeah,
anyone can click on that button, and it'll take you to the calendar link, and you can hop in on any day that's available, and you can have a one-to-one meeting and just say, hey, here's my concerns, or can you give me some clarification on this? I just want to meet the founder and get a straight answer and not reach an email.
Yep,
you can do that.
It's incredible. Nobody that I know does this really, except James Pelton with his YouTube, just lets people do prayer requests or just calls with him, like 15 minutes, here and there throughout the week. It's really nice that you've made yourself available to people directly like this. I think that gives a much better customer service experience, because they can talk to the founder themselves if they want to. If they really want to, They got like 1, 2, 3, 4, 5, 6, 7 different days in the upcoming month where they could just book a slot with you and be like, hey, what's up, Nick?
Yeah, that's some of them just do that. They're just like, hey, I just wanted to meet you. I just want to put a face with the name, and just, sometimes we'll do exactly what James does, where I'll sit and pray with them, or I'll sit and talk with them, make sure they're good. And, it's great. And even James was like, he was like, when he saw that, he's like, I'm actually kind of surprised, Nick, that you opened yourself up to the way you did for this. And I was like, and I'm trying to remember what I said to him, but I was like, but see, that's how this is supposed to be. Transparency involves some interaction with a founder. Yeah. It can't be a person behind a Telegram chat that is absolutely blind, or speaking of some DeFi apps where you just get an occasional video, or they have like one of those, what was one of them did like last year, where you could hop into a Telegram audio chat and it was open to the entire community, just listen to it, kind of like a fireside chat kind of thing. But this is it, and this is just my opinion, Alex. It shouldn't be that way. It should be like, hey, if I have a concern, I can go to them directly. And even to that point, our form of communication for our ecosystem is Telegram, but they're news channel blasts. They're a channel. It's not where people can create FUD and just start to crash a system. It's there to keep you informed, to show that, hey, we're breathing, we're alive, we're constantly making progress, we're constantly giving updates, and at that same thing, that same mindset or frame is that if there's a lot of times whenever there's an open chat, people will send those links where you can sweeper bots into things.
They'll send phishing links, and no, I agree. If you are this docs in public, like if you have your LLC paperwork out there, people look you up in the business registry in Oklahoma, like you are essentially a traditional business, fully doxed founder that has an open door policy. People can hop on a call with you if they have concerns or just want to meet you. I think that's a million times better than having to dig through mounds of FUD and scams and nonsense in a server for a team that has anonymous devs or team members and moderators from who knows where that don't care. They don't care about like their customers as much, maybe in some situations. So this is so much better. Like if anybody has a question, they can take it to you directly, talk to you on video. You guys also have that awesome customer service policy. You got the support email right here. So this is great customer service from just a traditional business perspective. Personally, I am sick of trying to find information in Discord and Telegram servers for companies and projects where I don't know if what I'm reading is absolute nonsense from just strangers on the internet who might have ulterior motives. So they could just come straight to you, which I really like. And I also want to just point out, one of the reasons I said that I like this business model, that you guys have this 20% subscription fee deducted from the rewards every month, is because when I'm analyzing a business, and all of these at the end of the day are businesses, and if I am partaking in a business opportunity, I am generally going to analyze all the risks that I can, including the financial risks of your business plan, because if your business fails, then my investment fails. All right. Now, this is not an investment opportunity, blah, blah, blah. But you know what I mean? If I'm buying the opportunity to create a custom trading bot with you for prop firm trading, then I am going to want to make sure that you guys stay in business as long as possible to maintain my servers and my bot and everything involved there. So this is a good strategy because you don't want to shoot yourself in the foot. You guys gotta have a profitable business to continue and to grow year after year. So I have to analyze this as a business analyst, as any VC would, looking at a business plan. And I see that system here, and I'm like, this could be a highly profitable business for you guys, which is good for me if I'm involved in this, because I don't want you guys going anywhere or going out of business. You know what I mean?
Right, exactly. And that's why this is set up this way. It's like, so people are like, man, they're going to rug. First of all, there's not really anything to rug. It's not like you're pouring capital into a ROI dApp or something where it sits on the contract and someone just runs off with this number. No, this, by the sheer business design and model, this is how the subscription agreement is how the team continues to grow and flourish, is because when everything, the smart contract automatically divvies everything out, just like smart contracts do. They are phenomenal pieces of technology. And speaking of which, good segue.
So speaking of your smart contract, I've read through it myself. This is here on Solid Proof. You've had it audited just recently, and it's the Pulse DeFi contract. It's all right here, easy to find, and it got a very good rating. You had like 2 medium issues, 1 optimization issue, which to me, I read through this. It's nothing really. You want to look for critical and high priority issues that have not been addressed or fixed. In this case, you guys just had basically centralization issues. However, you guys are a centralized entity. Like I said, this isn't a trustless like DeFi contract that is just out in the wild operating on its own. You guys actually have control over some features of this because you guys are running a centralized business. Is that right?
Right. So primarily what you're seeing there is we have control over the administrator side of the contract. And it's when people have a concern about the centralization of it, there are certain things that you have to have on the administrator side to make sure the contract performs correctly. And, and at that same token is if their wallet hacked or something, they can come to us and we can try to fix it. You can't necessarily do that whenever a contract is just out there. And we are very much here to protect, and we're very protective of our clients. And so this is one of those frameworks that had to be set in place to do that, was to keep it a more centralized in the aspect of the administrative side of the contract.
Yeah. So you guys go look this over yourself. I won't dig into every single issue here. Like I said, it's some medium issues that you can just go through, but this is generally pretty typical with any kind of centralized business model. They keep some level of control over the smart contract versus a fully DeFi, like pure DeFi trustless contract that is renounced and nobody can ever interact with it in any way except in a very specific function. But if you have customers that you have some service level contracts with, you guys have sales contracts with folks, you guys keep some level of control in order to protect them and to make sure that this thing doesn't, because if something goes wrong here, you guys keep the power to fix it on the fly. Is that correct?
Correct. Yes. And we have to be able to have a certain level of administrative control to be able to correct things as they're coming in. And it's, again, it's for the client safety. It's not for anything else. Like I said, in this context, it's there just by the sheer design of it, prevent that thought process of rugging or, the business model is also an effect of a safety measure for the client and for us too, Yeah. So.
And like I said, I read through this contract. It's very easy to understand if you guys want to learn how to read some Solidity contracts or keep your skills sharp. It's a well-commented contract, so props to you developers or the guys over at dApp. It's a very well-written, simple, easy-to-understand contract. How it all functions is very clear. To me, at least. Obviously, I'm not giving any claims of anything. I didn't do a full audit myself on like security exploits or anything like that. But that's why you have places like Solid Proof that runs it through all of the automated auditing procedures to look for different things like that. And then also they manually go through it. But I looked through it for the business logic and I stepped through it actually with Nick here on video for probably 30 plus, maybe 60 minutes. And I went through the code and your white paper. And I said, based on what you guys are saying here, is this what it's doing here. And I kind of verified, yeah, this thing you've laid out in the white paper, your operational model here for this part of the contract is what seems to be going on business logic wise in the contract. So from my perspective, this is way over doing your own research, by the way. You guys know my reputation. If you watched me for any length of time, you know I am crazy with doing my own research. Most people won't take a look at a smart contract. Most people don't know how, but I will at least glance at it and make sure like things are kind of adding up with the business logic in the white paper and what I'm seeing in the contract itself. And if they've got an audit on top of that from a reputable company, which Solid Proof is, then that rules out a lot of the attack and exploit vectors that are known in the wild that can be automatically tested for very easily with testing, automated testing procedures. Anyway, I won't nerd out too deep. I don't want to lose too many people on here, but in my opinion, as just some guy on YouTube who also is a software engineer, my personal opinion is I like this contract. It's good for what you guys have it doing. Now that contract, the Pulse DeFi contract itself, is not doing the actual trading, correct?
No, it's not. So the way it works out is so to reiterate, there's no manual trading whatsoever. The prop firms, what they do is when they pay out, it goes into the contract, and from the contract, it is then autonomously sent out. That to the pin holders to the subscription fee, everything is autonomously sent out. So it's all very streamlined in the way we have it set up, and it is also very what would be the word? Very transparent, because you can, from whenever you receive your funded account, you can see every single trade that happens. You can, which then you're like, oh, okay, this is awesome. I can see everything going on here. And so this, I believe that is the contract for the,
this is the Pulse contract for, user tracking of pin numbers, right, and also reward distributions and calculations.
Yes. Yep. So obviously, as you can tell, we've had a decent amount of activity so far, and we are, continuing to grow.
Yeah, and this this looks good to me. Have people taken rewards out of here yet? They
have not
claimed any Nexus tokens yet? No.
So the way that actually came up in, I believe it was another AMA. I'm trying to remember, because the first person to receive their actual their challenge credentials, it took about meaning the challenge was started was at the kind of like the end of the first week of January. And then we had to pass the challenge. So you're looking at, once they got their funded credentials back, then the first count is looking at the beginning of next week, which is the 11th of February, somewhere right in there. And so for wave one, meaning what's available to the public. Now the beta testers are a different thing. They're still receiving payouts, which we posted, and you can see them on the Telegram chat. So that is, in essence, how that distinction works. What everyone is seeing is the redacted, meaning we take out their account numbers and everything, and to show that, hey, these people are receiving payouts. That's the beta test users, and it is working as described. And that's why, and even over on the funded side, like of wave one, we're having more people come back and buy even more pins because they keep seeing all the transparency and all the trades happening. They're just coming back, and you can go through this smart contract and see where people have come back and just continued to buy more pins. when you see multiple from the same wallet address, you can tell. And it's because they can see that the transparency there. They're able to see that their bot is making these trades. They're like, oh, this thing is real. This thing is very tangible. This thing is just a truly something that works in this space for once. That these people are not a fly-by-night company. They're not someplace over in London or, who knows where. This is a company that actually wants to provide an equitable exchange to everyone else. And that's just not something you see in this space. And so it takes people a minute to be like, okay, we're going to go, we bought one pen, now we're going to come back and buy. We had someone that bought 5 more yesterday. They saw the proof in the pudding, which I think that's a Southern term, but forgive me for saying that. But you get what I'm saying. They saw it, they're coming back and they're buying more pens because they see their bot making trades on a daily basis.
Yeah. And that makes absolute sense. If I saw I am going to participate in this most likely, and with the results from last month for wave 1, what was it, $2,200? I thought we $2,242 off of a $5,000 expenditure. That's a 44% ROI essentially in 1 month. So it's realistic that in 3 months you could be well in the green on this, and just month after month after that, it keeps going. So
exactly.
Yeah, it's great that this is transparent on the blockchain, and especially once those payments go out, I think it's going to be a mad rush once people see the claims coming through here, which you said the beta testing is working and everything, but next week the first set of rewards for wave 1 get unlocked in this contract. Right. Is that correct?
That is correct. Yeah. So essentially how this works is whenever you buy a pen, no one outside of the Pulse pin holders can see the withdrawal page. It has to be a wallet that is set on the contract where they bought a pin. Once you buy that pin and you KYC and everything, then you can come back in and log in, and then it'll show you the dashboard to be able to click the withdrawal button and pull out your Nexus token. So, which it's there for safety reasons, but also that to make it more simplified to where people can't just get confused by something. There's a system and a flow to everything.
Is the payout is the reward availability date the same for everybody in wave 1, for instance?
So whenever you come in, that once funds enter the contract, then it's distributed across to all of the pin holders. So in that context, yes, it is available to everyone at once.
Okay.
Now because Sally came in on the 13th and Tom came in on the 15th and Jerry came in on the 17th, their prop firm payouts are going to be offset from each other. And it also depends on which prop firm they select. Some don't do the standard 21-21 then biweekly logic that some prop firms have. Some are just straight off biweekly. So everything is offset a little bit. So in theory here, Alex, you could receive a payout every single day and just go in and withdraw how it's set up. So because the prop firms are just going to come in and just keep pouring into the contract. And if it's coming in on a daily basis, then everyone receives a payout on a daily basis. In theory.
So each prop firm pays the rewards at different times because they're different entities. The smart contract is smart enough to be able to receive a payment from a prop firm, run through the calculations to take that payment, average it out, or distribute it to every user, and then every user is able to claim like a fraction of that amount, and then the total rewards that get available to claim like that over the course of a month from all the prop firms dropping payments into the contract is totaled up. And that's how you come up with the numbers that you have here for the first wave. So far, the total is 2,242 for each user. And if that's the case, then why isn't the claiming available yet if that's the case? Or is that, am I not understanding something?
No, you're right. So the rewards aren't available yet. That number is the amount that is accrued so far by funded accounts. So the next week will be the first payout from the very first funded account. Does that make sense with what I'm saying?
And by funded account, you mean a prop firm?
Prop firm, yes. Yeah.
So
a prop firm funded account.
A prop firm funded account, and the first one is going to be sending its payment for trading profits in 2 weeks, you said?
It should be like the range we have right now is like from February 11th to February 15th. And that's because even once it's requested, they still have to send the payment, which typically takes 3 business days to send. That's the average time they take to pay out.
I see. So, okay.
Yeah.
Yeah, that sounds good. So that makes a lot of sense then. With wave 1, you can see in the prop firm's funded account dashboard for each user,
Right.
for each custom bot, you guys can see all of these, how much has accrued so far. You've totaled them up internally in your business analytics. Here you've totaled them up, averaged it out, and you've determined so far everybody involved is going to be getting this much at this point in time. Could this potentially go up before that first payout, or is that kind of like the trading period has ended? Now the prop firm's doing their stuff to get payments ready for distribution. Is there potential that this could go up some more this month before that first
Correct.
payout
Yeah.
comes?
Yes, and so keep in mind it's all very much a mathematical equation. So you've got people coming in with new pins, and you've got people that are passing their challenges, becoming funded accounts. You've got people that have their funded accounts that are just getting ready to get paid out. But it's all just continually pouring into the smart contract, which is then being distributed out to the pin holders, which is then coming into the Nexus token, which is then spiking up the Nexus token, which is then creating an even greater return through the Nexus token.
This is really great because I've watched all the other AMAs, which were excellent, right? However, this portion of it, I think a lot of people will want to know the details of how some of these parts work here. And it's very enlightening asking you this, and you breaking this all down for us here. So this is really great. Great information for anybody interested in the Pulse DeFi to understand exactly how things work. It's not just some mystery behind a curtain where all of a sudden, you don't know what's going on. You're just hoping and praying that something's going to show up to claim someday. That this is how it's working if I understand it. I put in $5,000. It obviously everybody's timing is going to be different. So I put in $5,000. I go through the bot customization process. I make the bot with you guys. I get KYC'd with the prop firm. The bot starts running after a day or 2 or 3, or potentially longer, depending on the prop firm that I choose. Then all of a sudden, I'm approved. My bot then is trading with the prop firm's liquidity. My $5,000 turns into essentially $200,000 in their account that is trading with my bot that you guys helped build. And then at that point in time, once it starts trading, I'm guessing I fall into a trading period of time or something, with probably based on each prop firm, because it's all going to be different. And that's why you built it this way, to be just like, you can accept payments at any point in time. You process it like a queue. It doesn't matter to you guys when the payments are coming in, as long as you guys can match the PIN numbers with whoever is eligible. How do you determine who is eligible in, let's say, wave 1? What would make someone part of wave 1 versus wave 2?
So that's a great point and great question. Obviously, that's why you asked it, Alex.
Thank you.
Yeah,
I told you I got so many questions, and I'm trying to I'm trying to figure out the ones that would be most useful to people that they haven't heard yet.
Right. Yeah. Okay. So wave 1 is actually at approximately 100 pins on the contract. We are going to do a pause or a selah and just kind of like, all right, where are we at customer service wise? Where are we at challenge wise? Are we making sure that everyone is good? And whether that takes 1 week, 2 weeks, a month, we don't know, but we are not. It's going to be right around that 100 pin range, and so we want to make sure that everyone is taken care of. Because, like I said, we're a long-term company, and our customers are. I mean, with any business, that it costs more money to go out and get another customer than it is to keep your existing customer base happy.
Yeah,
and so that's our design, and right around 100 pins, we are going to kind of, give or take. There's going to be some give there because of current people that have asked to make sure that they want to get on that wave 1. But that's the word delineation between wave 1 and wave 2 is the fact that after a certain set of pins on the contract, then we will take a pause, calculate everything, see where we're at, make sure the team is good, make sure the team feels comfortable with the volume of pins, because that's a lot of servers to maintain. It's a lot of bots to construct. Do we need to bring on more employees, to start building out and constructing more bots? Because that's the time intensive type of activity there. Or just all the support staff that needs to be involved, make sure that we are covered. Also to make sure that wave 1 itself has an understanding of the nuances and the intricacies of the Pulse DeFi. Because I mean, there are things that you learn as you go along that they're not. It depends on the lens they're looking through. They're not all in my position where they helped create the company. They're from a customer's position that bought a bot, and they may not know anything about prop firm funding, how it works, or a smart contract, the code on here, what a sender, an address. You see what everything on here. They may not know what any of that means, and so if they have questions, we want to make sure they're comfortable with that. Wave 1 is set and good. That's kind of the differentiation there, Alex.
Okay, so wave 1 is determined internally by you guys by essentially a number of pins that you put into action. So you guys are saying the first 100 pin holders, that's wave 1. After that, it'll be wave 2. Now, since all of the rewards are aggregated and averaged out and distributed to everybody, if I joined wave 1 tomorrow, would I be entitled to any piece of this pie that my bot maybe might not have been involved in yielding?
Yeah, that's an excellent question. And it's one that we get asked more frequently than you would probably think. We get asked a lot of questions, and some of
the timing is it. is probably pretty wild
Yeah.
with how this all is set up with when people join, when their bots start trading, when that person's prop firm funded account pays into it, and what amount of those rewards each person is entitled to. How do you determine that?
Yeah. So on the contract, there's something that is called an escrow feature. So whenever you purchase a pin, so you purchase the pin, and then the team sends you the purchase agreement or the sales agreement, the subscription agreement, and that outlines everything for you. So between the time that you purchase the pin through the dApp to the time that you sign the contract, that time window right there is where you have the ability to request a refund. After you sign the contract, the team goes to work, and becomes a non-refundable process because of the speed at which they move, the costs that are associated with building everything out. But also what happens as soon as you have selected your prop firm and send it and start get that set up, the team is notified, and then that is whenever you're moved off the escrow contract and moved on to the contract. So by that notion alone, as soon as you have it's sent off to the prop challenge team, then you moved on to the contract, because you're showing that, hey, I'm actually working. I'm not just going to be a drain or a pool, like a PULL, a pull onto the on the contract itself. There's actually, you're working with the team to move in the right direction. So that's whenever you're added onto the contract, and that it is spread out. You would be entitled to rewards in that contract.
And that was well explained. And if you read the contract itself, everything he just said about the escrow accounts, I did verify before we even started this AMA. So they got like a confirm user function here, and that's when I'm guessing the user hasn't signed everything yet, and everything's still getting set up before they're fully operational. However, at that point, their bot might actually be up and running already before they fully signed all the forms with you guys and sales contracts. And in that case, they're accumulating rewards still, and you use a point system in the mathematics here. Like I said, the dApp guys are brilliant. How you guys have done this, and it basically uses points to determine what proportion of the accumulated rewards get added to your stake. So that, if I'm understanding this correctly, it's obviously it's complicated logic, and I could be wrong, but based on just a preliminary analysis of this, it looks like users are in an escrow status. They get escrow points if they're accruing any kind of rewards at this point. And then once they're taken out of escrow, once they're confirmed, their escrow points get moved into their stake points. And I'm guessing the amount of points that they would have accrued is much smaller than somebody who's been in there since the previous month or whatever, or period of time of reward distribution for staking. And so they would have, let's say they get 5 stake points and somebody else has 95 or something like that. They would only get a small amount of the overall Nexus rewards that get distributed to everybody that ends up in their claimable staking account here. I don't know if I'm explaining that correctly, and obviously I fuzzied the math a bit because I didn't go through the exact equations for how you guys calculate everything. You guys can look through the contract yourself to calculate it exactly, but it's basically using what percentage or proportion of the rewards you actually contributed while you've been in escrow before you're fully confirmed. Then once you're confirmed, you start accruing staking points along with everybody else at the same rate. Is that right?
high overview. Yeah.
Hello. So don't quote me on everything there. I'm doing my best to make some guesses based on just going over the code very quickly, but it's a really well written contract, easy to understand. They've even got the comments here. They even talk about once approved, user can be automatically confirmed and no escrow is needed. And once confirmed, user gets points added to their total staking points. And the rewards are split evenly based on the number of points in the pool. So if I've only been accruing points for a couple days versus somebody who's been accruing points for 20 days, they're obviously going to get the lion's share of those rewards that are distributed. And I think that's a pretty fair way to do this. So new users coming in don't just get, like, if I joined today and the payment comes out tomorrow, I don't get the same amount of rewards as somebody who's been trading for a whole month already. I just get my very small fraction of that, rightly so. But the next month, I'm right there, or the next period, I should say, the time period, I start right at the beginning at that point with everybody. And then I have the same amount of staking points as everybody else who's been in since the previous period. And all the new people then aren't going to drain my value unfairly. Is that a correct assessment?
It is, yes.
Awesome. I think I'm getting it, Nick.
Yeah.
I think I'm getting.
So what's your thoughts so far? Now that it's starting to gel.
Yeah.
What's your honest thoughts so far on everything that you're seeing, and on how we built it out from the Nexus to launching it first? Like I said, we're really excited about this because we haven't seen anything else done in the space yet like this. And so it's funny because we have actually had people contact us like, hey, there was, and I think you kind of alluded to this at the very beginning. There was like, yeah, we've seen other people use prop firm funding to do stuff before. And I was like, and it's funny because I told the team, I was like, whenever someone says that, ask them this. That's interesting because this technology is new by comparison. So we'd be interested to know what other platform is doing it. We have had several people say it to us. Not once has anyone ever responded back to tell us what prop firm or what business is doing this exact same thing, because there's no one else that has done it yet. And it's a wild, but yeah, we're excited about it.
Well, normally in those situations, this would all be done on the back end of the business privately by their accountants or whoever's running the project. Probably not a certified public accountant. Probably not a CPA adding this stuff up and trying to run this math for you. And so you don't know what you're going to get. Whereas with this, you can literally go read. It's an open source contract. You can read exactly how it's going to be distributed to you and what stake of the current rewards you are entitled to. You can even come here to the read contract tab and you could look at if you're an escrow user, you could look at your pending rewards. You can look at your points in escrow. If you just joined and you're still going through the process, you can see how many points you've accrued in escrow that will carry over to your total stake rewards here. And I think that's really cool. That's the beauty of blockchain technology. I love that you've utilized that in this business in a way that makes the accounting features public, trustless, and transparent, that everybody can verify. And if they have an issue with it, they can show you themselves and be like, I don't think this is right. Can you explain this to me? And then you can walk them through it and look at their transactions. And since you guys are a centralized business with a customer service sales contract for each person, you guys, obviously with your customer service statement you made earlier, try to give the highest level of customer service possible. So that makes me more comfortable when, we're in that state where like we have these hybrid systems where you have to have like the business side and the DeFi side. And if either of it doesn't work right, like it could be more risky than it has to be, but this is cool. You've utilized it in a good way. And for a part of this that like like this thing's still making money no matter what. And you can see how this works, how the money's coming into the contract. So I'm guessing here we will see a receive payment transaction when the first prop firm drops their payment in. Is that right?
Correct. Yes.
That's awesome. That is awesome. I could set up a bot. I can set up a script that just sits here and waits for that transaction with that method to come through. And I can have it set up a notification on my phone that says payment sent to the Pulse DeFi. I'll rush over here and look at it, like, how much did they send? What are we going to get? Then I'll go look at my share of the staking points, and I'll be like, oh, I'm about to get this much. Which at that point, it's already available. I won't even have to do that. I just go to the dashboard, which, by the way, is the dashboard here. If I go to the pulsedefi.ai, if I click enter dApp, I see that brings me to the sign up page, which I'll show you guys. I'll give you a demo here. It's super easy to sign up. I'm going to do it myself at this point. And I'll show you how to do it here at the end of the video. I'll give you a demo. I'll walk you through it. It's super simple. But once I've done that, would this enter dApp take me to like a dashboard to see my rewards?
Right. Absolutely. So once that you signed up and you're approved and on contract and everything, then you can go back in and log in using that same wallet, and the dApp will recognize that wallet address and say, hey, show the withdrawal feature of the dashboard. So it'll look slightly different, same color scheme and everything, but it'll look different to where there's a button to withdraw rewards. So it will be available as a different user interface for customers.
I see. And your smart contract handles all that too, by the way. So if my wallet address, my account address on the BCS chain that I signed up with is a confirmed user in here with as a pin holder, I can literally come in here, put my address, hit query, and it'll tell me if I'm confirmed or not. And that's probably how you're going to do the logic to grant access to the backend dashboard once a user is confirmed. Otherwise, it just kicks them out. It's great to know how all this stuff works, by the way, because a lot of people, when it's like a hybrid model like this, people are often putting all their trust in this business and don't know where to look for information. And this information, I think, also alleviates your customer service burden. Anybody involved in this, like if I drop $5,000 in this, I'm going to watch every single video ever made, so I fully understand everything, right? And this is
I would expect everyone to do their due diligence. That's, whether you're buying a cell phone, a computer, a home, land, stock, anything, you always do your research. You always look at the possibilities, the ups, the downs, the pros, the cons. That's just wisdom. That's prudence. That's, with wisdom and understanding, you have clarity of thought and how to proceed.
Right.
So I agree with you 100% there, Alex.
And that's like my job is to help curate as thorough of information as possible. I know my AMAs are known for being longer, but if somebody's putting thousands of dollars into something, they're going to take the time to do exactly what you said. Most likely, if they are wise. So I try to make sure that that's available. So I'm glad you came on my channel for this, because not only obviously my community is going to be interested in this, and I know a lot of them already are, because I share a lot of community members with Pelton and Justin and Andy. A lot of those folks are going to be glad that we just walked through like the logic here on screen and how to figure this out in a pretty step-by-step fashion, and how they can go in here, check their rewards through the contract, what they can expect in terms of when payments happen, when they can claim rewards. Now, if you have 8 prop firms running and 100 different pin holders, like you said, you could get payments every single day. So instead of having to wait once a month to get my paycheck, essentially, which is healthy, if it's at $2,242 on a $5,000 bot, then, you know, if I'm relying on this for cash flow purposes for my life and my bills, you know, waiting a whole month or longer to claim a payment might not be ideal, but it's still awesome. I mean, at those returns, that's insanely incredible, right? I don't want to look a gift horse in the mouth if things are that good, but if you could claim even more frequently than that, like daily or every other day or once a week or whenever those payments are coming in from all the different prop firms, then I could be getting $500 here, $250 here, $1,000 here over that course of that month, and be able to just have like a steady stream of passive income. Although it's not passive, I have to go and I have to claim it. I have to do things. I have to convert the Nexus token. I have to off-ramp it to my bank account. There's a lot involved. I have to set up the bot with you guys. I have to pick a prop firm. So obviously it's manual, but at the same time, like I'm setting up a little mini business with you guys. You guys help me build a mini technological trading business with prop firms and trading bots and all this. Obviously, I'm going to have to go in and click some stuff, right?
Right. Yeah. And it's interesting that you brought up that it was like a business. And some people, we've actually had people use a self-directed IRA to purchase these too.
What?
Yeah. So they were like, hey, can we use our self-directed IRA? We're listed as the I think it's called administrator on the self-directed IRA. And they're like, we confirmed it with our this is the person who had the self-directed IRA. Like, we confirmed that we can on ours use it in crypto. Can we do this? And I was like, I can't tell you if you can or cannot, but that is up to you as long as it's, you know, it's within your guidelines. And sure enough, they put it in as self-directed, they used their self-directed IRA to purchase a PIN and to diversify their portfolio. I was like, again, like we're saying, Alex, my community is awesome. They just keep bringing up these ideas. I was like, okay, all right. That was an awesome thing to do. I was like, interesting. Hadn't thought about that. You know,
that's crazy.
Yeah,
that's wild. I didn't even think about that either. That's very cool. Again, none of this is financial advice.
Nope.
I'm a dude on YouTube that loves entrepreneurship, and I love DeFi and everything involved with it. So do your own research, talk to your own financial advisor, and diversify in everything you do. Don't go all in on anything. Make wise choices. And hopefully all this information here helps you analyze this opportunity. I got some other questions in terms of diversification. Your trading bots that you help people set up. What assets do they trade on? Like, what is I know it's probably proprietary to some degree, but could you at least tell us like what assets you guys are trading on?
Yeah, so there are some that we use. We have them with different ones, different pairings. Some are on indices, and then some are on standard Forex. So we do have different ones to that diversify it out. And so different people will see different things. You know, until you're a pin holder, it is one of those kind of proprietary things, like you stated. Since we're on a public AMA, we want to keep everything close to the vest, as you can imagine.
Yeah.
But we do make sure that everything is diversified. Again, it's an equitable exchange between us, the pin holder, and the prop firm. So if we loaded up everything too much on the prop firm under one thing, that would not be an equitable exchange for the prop firm. And also, it would centralize risk, which we are not about,
right.
You know.
Right. So do you set up each bot using like one person's bot might use some Forex pairs to trade. Another person's bot might use big indices in like the stock market or something else. So you guys have a diversification strategy for all of the bots in the system that you're rolling out.
Right. Yes.
So for like all of wave one, you've got 100 bots. You've got a strategy that says, X% of the bots are going to use these indices, X% are going to use these Forex pairs, and that's going to minimize our risk exposure to any single asset across the board.
Correct. Yeah.
Okay.
And that strategy is a strategy in motion. So we do gauge it by what we have going on. And so sometimes we do have to change things up to make sure that it does stay diversified, and we're making sure that it is not centralizing anything for the pen holders. So we do have to be very careful of that. Again, that is something that we are keenly aware of, and we do make sure that to avoid those types of situations where it's just, when we say centralization, excuse me, I'm directly referring to stacking a bot on a single pair, and with a single algorithm. That is not wise in any circumstance. So.
Yeah, like the Turkish lira or something. Like,
right.
Now let's say one of those Forex pairs, there's some black swan event or something where one of the country's currencies you're trading like drops off a cliff in a short period of time. Anything can happen. I know it's very rare, that kind of thing. But let's say one user's bot is trading that pair, their bot gets wrecked or something. Will they be okay? Will they still receive rewards because everybody else that's all their trading bots are essentially diversified and then aggregated, and then that person will still receive an equal that loss basically gets absorbed across all the bots. Is that right?
Correct. Yeah. And then the only thing that's if in theory, I'm just saying in theory, we haven't experienced this yet, but if something were to happen, the only thing that the pin holder would be responsible for paying for is the next prop challenge and we would go back and wipe the bot and then reset it to the prop firm of their selection. And while they still receive rewards because they're progressing forward with their next prop firm challenge and not being a lame duck or anything of that nature sitting on the contract. So yes, they would continue to receive rewards and spreading across. It is another safety measure that was put in place.
Okay, I see. So do you have a max drawdown that any one bot can hit before that user gets unqualified from the prop firm?
Right. So most prop firms are anywhere from max drawdown per day is 4 to 5% per day.
Yeah.
So like when I say these are very conservative bots, they are. That's why you only see like a 1%, 2% return a month, is because we have to stay within those restrictions but guidelines of the prop firm. And that's how we keep within that very narrow window of programming for the bot, is to make sure that they stay within those set files for the bot, stay within that trading frame. So that's the drawdown window that you see for most prop firms is 4 to 5% per day.
Okay, and you guys are doing high frequency trading on like stuff like Forex. So obviously, like if you guys make a gain or loss, it's going to be a fraction of a percent, probably stacked up, aggregated over the whole course of the month to get to that 1 to 2%, ideally, or I guess 1 to 5%. You could potentially.
Yeah, we said 1 to 5%.
1 to 5%.
Right. And let me clarify real quick, Alex. Is the high frequency trading bots are used for the qualifying of the prop firm challenge, and then we have the bot itself that had been constructed out during that time period that is set to that prop firm, and that is what runs on it. But you are correct. and you'll see like during the trading period, you could have over the 21 days that we discussed, you know, give or take, you'll see hundreds of trades on there, and just little slices here, there, and here, there, and here, and there. So you will see that, and it is a very active bot. It's not. They don't do swing trades. They don't do martingale. None of that. In my opinion, everything has a strategy to it, but that is not anything of a pulse bot strategy. So very price action oriented.
I see. And with the prop firm liquidity you have access to, that kind of strategy can be very effective if you've got enough money.
Yeah. I mean, if you're running off of like a $10,000 prop, you're not going to see a lot of return. Yeah. But at a $200,000 prop, then you start seeing a gain. And that's also why I was talking about the price point. Then it became that is a good price point because of the ROI timeframe. You know, like you said early on, based on those numbers, you're looking at a potentially very realistic possibility of ROI within 2 to 3 months. You know, that was by design. It is these ones where you have to you can't ROI for like 6 months, 7 months, 8 months, and you're pouring capital in it, and you can get, but you know, it's locked for 60 days or something like that. Those, you know what I'm talking about, those types of, this is a singular purchase or a one-off purchase where you don't ever have to pour in any additional funds to do that. In theory, you get what I'm saying by the design of it. And so it's not where you're just, it's not a trading bot where you go load up a brokerage account and then just keep pushing funds in it to have a bot trade it. It's where like, nope, just building it out using someone else's money to make me money. So, or OPM other people's money to make you money.
And that's a very solid strategy to make more money faster than you could otherwise if you have proper risk management. And if you're trading with leverage to do that, you could potentially get absolutely wrecked very quickly. Whereas with this, you know, with prop firms, you minimize your risk exposure. In my opinion, there's always still risk. Obviously, we've talked about that, but it's in my opinion way less risk than margin trading or leverage trading. If you're trading 40x leverage or 100x leverage, which I've tried, you get really quickly blow up an account, and if you're shorting or, you know, trading options, you could even potentially owe people money if you don't know what you're doing. So, and I've seen horror stories on Wall Street bets on Reddit where people like, I owe $160,000 because I sold calls and then it crashed or whatever, or like, I don't know, or you know what I'm saying. It's really risky sometimes. And prop firm trading is, you know, the worst case scenario is probably everything goes horribly wrong, and that's, you know, like you're out $5,000 in like the most horrible worst case scenario.
Right. Yeah.
And that has not happened yet, has it?
It has not. No. Like, and I think I mentioned this on James Pelton's AMA. Was the only time that we've had a prop shut down on us so far was during the beta testing. And what happened with that, and we never really fully clarified what the issue was, whether it was a programming issue, whether it was human error, we don't know. But what did happen was, with prop firms, you can't carry trades into the weekend without prior authorization from the prop firm itself. Well, on a Friday evening when the bot was supposed to be off, and we had confirmed that it was off, there was another trade that was taken. Now, whether that was some kind of latency or it was just an oversight, it carried it into the weekend. Then come Monday, we received a notification, and they said, "Hey, you carried a trade over the weekend. It's not allowed." It's one of what they call a hard rule, and they shut down that account. Yeah. Since then, that's what beta testing is for. You find out every weakness, every chink in the armor, and then you break it until something breaks, or you break it until something breaks. You keep working it, and you run it through the ringer until something breaks, and then you find the solution for that. And that's what we did. And so then we went back and put in like triple stops to make sure that it would never happen again. So
I see
that's the only time that we've seen a prop shut down on us like that.
I see. Okay. And that's good to know, and good experience that you guys had in your beta testing to be able to come up with double and triple checks to make sure it won't happen again with prop trading rules. And that was only one account. Now, with this setup, that $5,000, once work has begun developing the bot and setting everything up, is essentially a sunk cost. Is there any way that somebody could reclaim their capital, or is that $5,000 purely a service fee for setting everything up for the person, and the capital that is trading in that prop firm account is that's not technically their capital in the account,
right? Yeah. So the $5,000 is, like I said, I'm trying to remember which AMA I said this on, but the $5,000, there's a very small profit margin on it for the team. And most of the time it's pushed forward for marketing purposes or whatever. So it's already earmarked for something else. And it's usually spent on AMAs and things like that. And the other part of that 5,000 USDC is spent for the actual construction. So it's like a hard cost. Think of like a house that you buy lumber for. When you're building a house, you have to pay for that lumber, and you have to pay for the builders to build it. And you have to then have it, you have to put it through the ringer to get it built. That is a hard cost, and it is it is utilized to build out the bot. And then the team's primary profit is on the back end. That $200,000 prop firm, that is not liquidity that anyone will have access to ever, because it stays within the prop firm or their brokerage of choice that they use. And that is what the Pulse bot trades off of. So it is nothing anyone can ever withdraw from, take home, or anything like that from the liquidity that is being used. Is what I'm directly referencing right there.
So if a prop firm unapproves an account, what happens to that initial capital, that $5,000 that's in that prop firm account? Does that just go back into the company, like treasury? What happens in that situation?
You mean that the $200,000 account, or what are you?
No, it's the $5,000 that unlocks the $200,000 liquidity.
Okay, so so in this process, the 5,000 USDC doesn't go to unlock the liquidity. The team, part of that goes to the construction, and part of that is actually used to pay. Typically, a prop challenge costs around $1,000 to $1,700, and that is set to the client to pay for their prop firm challenge. So when I say there's a very small margin of profitability on the very end, it is very small.
Yeah.
And so whenever that, if say a prop challenge is a funded account is terminated by some theoretic possibility, that happens, this over here has already been sunk and spent on construction of the bot, meaning it is already gone by the time the individual pin holder, their funded account is running. So if an account is terminated, then that means that the only thing they would have to pay for would be a new prop firm challenge to be passed. And then because of the way that the agreement is set up, we will wipe the bot and reset it and pass the new challenge for them as well.
Okay. And the old prop firm account, what's the close? Like, this is just out of curiosity.
Yeah.
How this works, and just to understand your, your capital efficiencies as a company. Because obviously, I want this thing to be as successful as possible, especially if I'm going to participate. Say there's a fluke, and let's say you got 100 pin holders. Let's say there's some glitch or something with one of the accounts. The prop firm closes it down. That person has to create a new bot to keep going or whatever. Hopefully they've ROI'd by then at the rates that we're seeing, like they probably will. But let's say they've even ROI'd. They've like put in $5,000 to make the bot and everything. It's been doing great for half a year. Let's say they've made $10,000 or something. And so they're happy and they're like, yeah, set me up another one. Let's keep this thing going. Like the prop firm account that they had initially, what's the shutdown procedure like between your business and the prop firm's business?
Okay, so yeah, that's a good question. The prop firm, they just automatically shut it off and it's disconnected from the bot. So from their end, they shut off the funded account, and it just says it goes inactive. And so then they send a notification that says, "Hey, this has been shut down for this reason." Usually, they send like a code or something with it, and then in parentheses, it gives you just. Sometimes it's a vague summary, but sometimes it's a very clear summary of like, oh, okay, that's what happened. That's what we saw with the one in on the beta test, where it just gave us, active trade weekend, something like that. And it gave a very quick summary where we actually had to contact them and get clarification on what happened, because obviously we didn't know what happened at the time. But the prop firm does that part on their own, and there's no disconnect. So what we do is then we take the bot, wipe it, and then everything. And then once they select a new prop firm, pay for it, and we pass the challenge for them again on this. And then during that, we're reprogramming and then reset it to their funded account once that challenge is passed, and they're off to the races again.
Okay. That makes a lot more sense to me.
Yeah.
For whatever reason, I had in my head that the prop firm had, an amount of user capital in the account that gets amplified to allow them to have access to this much liquidity, $200,000 in this case, to trade with. But that's not how this works. It's actually, there are fees involved, and with the prop firm to unlock the $200,000 of liquidity and to create the account with them, that you guys help set up with them, create the bot, set all that up. And basically they just have access to an account that has $200,000 in it that they're allowed to trade with. There's no capital of theirs actually in that account that goes back to them or you guys if an account gets closed down. They just have access to the prop firm's $200,000 of liquidity to trade with in this account of capital, and they trade with it, and the prop firm's making all their money on performance fees, essentially, on how it's trading. I think you guys had here like 50% prop firm profit sharing. In your examples, the prop firm's profit sharing percentage goes down each month. Can you explain why that is?
Absolutely. So, all right. So this is my best way to explain this is prop firms are designed just by the sheer, I'm not saying ethically they're designed this way, I'm saying by their business model, they are designed for people to fail and not succeed, because they're doing a 50-50 share on the front end, a 70-30 on this, then the next 21 days, and then an 80-20 on that goes bi-weekly. 50-50 means you take 50 home the first time, they take 50 home. The 70-30 means you take 70% home and they take 30. And the last where they go bi-weekly is you take 80 home, they take 20 home.
I see.
So when I say their business model is built where people are designed to fail, they are banking on the majority of people not passing the first 21 days. Otherwise, it would just be a set percentage each time. You see what I'm saying there, Alex?
I do. That's very interesting and good to know. And that means that over time, the longer these bots run successfully, the higher the potential profits will be each month, because the bots will be taking home a much higher percentage of the profits from this situation.
Exactly. And then even that, whenever it hits the smart contract, then you have the Nexus token, which is every day there's a volume going through it, pumping up that price. So even if you waited, if it was paying out every day and it was paid out in Nexus token, and you wanted to have a bi-weekly paycheck through the Nexus token, you held that for 14 days to create a bi-weekly system for yourself. And then it's gone up. Think about all that volume that is going through on a 14-day cycle. You know what I'm saying? If you set it up yourself, where you just withdrew from Nexus on your contract or your wallet every 14 days, that extra 13 days is going to greatly go up, in theory, over time. And because of the design or the mathematical equation backing the Nexus token. Plus, you have the volume of OPM or the prop firms cycling through.
Right. Now, I have a question about the fees in terms of Nexus token specifically. So obviously, here on the white paper, you've got the prop firm's profit sharing fee. That gets taken out. After that, you've got the Pulse DeFi service contract fee, 20% subscription fee. That's taken out. Everything we've seen after that, the rewards are still insane, right? I mean, it's like we said, 44% for wave one already in this first month, which is just unbelievable, incredibly successful, if you ask me. Like if I get 5% in a month, I'm jumping for joy. 10 times that almost. It's nuts. Now, with the Nexus token being involved, it has a buy tax and a sell tax on the token.
Right.
Could we consider that an extra fee that the user incurs as part of this process, where if I'm thinking I'm getting $1,600, I'm going to have to minus 1% for the buy fee coming in. And then if I decide to sell it to take profit, I factor in whatever percentage the sell fee
1%
will be. 1%.
Yeah. Right. So whenever it goes into the contract, there's no 1% fee.
Okay.
So it's only whenever you sell from the Pulse, or, whenever you pull it out of the contract and you claim it, there is a 1% fee there.
Okay. So if I got $1,600 in $1,600 worth of Nexus tokens and I just sell them immediately, I would assume a $16 worth of a buy tax, or a sell tax, a sell tax. So I'd come out with like $1,584 in my example. And I just want to point that out for everybody involved, because I want them to make sure they understand the math. If something doesn't fit up, the Nexus token is involved, there is that extra 1% sell tax, which I have no problem with personally. That's no big deal, especially if I'm going to be making 44% potentially in a month, and more over time potentially. I keep saying potentially because I can't guarantee future results for anything. We can only look at historical stuff. But if you guys keep performing really well with your bots at an aggregate, then the prop firm profit sharing fee goes down the longer these bots keep running, and so they essentially become more profitable. If they keep trading consistently, then that 1% sell fee on the Nexus token is splitting hairs. If I'm making almost 50% a month on something, I do not care about 1% going to that Nexus token, especially if that just kind of stabilizes the reward system, because it's piling up USDC in a smart contract that is like a vault, basically, that only Nexus token holders have access to get that USDC out. So I'm cool with that, but I just want to make sure my audience understands how all this works. And again, like you said, if you just sit on your Nexus tokens, you could potentially speculate on them if you believe that the volume going through those Nexus tokens will continue to churn and raise the price in dollars of the Nexus token. Do you know how long, like, do you have a guess how long someone would have to sit on the Nexus tokens to make that 1% sell fee obsolete? I know you said in the first week so far, the Nexus token has gone up 1.485%. So if somebody sat on Nexus tokens for a week, essentially, before they sold, from when they got them.
Yeah. So
they've already done better than that sell fee, I believe.
Yeah.
I'm understanding correctly. Almost, just about.
Yeah. So essentially what you're looking at here is, like, if there was $10,000, you punch in 10,000 for me real quick, Alex.
Mm-hmm.
So if you're looking at $10,000, then you would get, then converted it, it'd be 10,148, which means you're actually gaining an additional, 48.55 after that 1%. So that was in 4 days with a minimal, with a minimal amount of volume going through the contract. I mean, these contracts are, the redneck word would be the shiznit. These things are awesome. I mean, totally legit, just way of, and especially whenever you have it designed and positioned the way we do. Oh my gosh, this will be, this will be something to truly see. Just like you said, set up something to read the contract and just have your phone ping. Yeah, that'll be awesome. So,
yeah, I think the Nexus token itself is great. I love the surge type tokens like XUSD, MDB Plus. They've been pretty rock solid. And if you have a system that's pushing real volume through them, any volume, even these companies or projects that try to pump their own volume and stuff, if I'm holding the token, good for them. I don't care because I'm going to benefit from it. Any volume going through is good volume, in my opinion, because the price appreciates. And in your contract here, you probably have the payments coming in from the prop firm. Does it come in as USDC and then your Pulse DeFi contract converts it there?
Correct. Yep. Once it comes into the contract, it converts it.
Okay. And do you have it set up so that this Pulse DeFi contract is exempt from the buy tax? Mm-hmm. Okay. Yep. But if I were to buy the Nexus token separately off the Nexus website, or the Nexus swapper here, app.nexustoken.com, if I bought it here, I would incur a 1% buy fee as well. Is that correct?
Yes. Yeah. The only people that didn't have that 1% buy fee are actually the during the pre-sale that we ended last week. There was a period of about a month, 3 weeks to a month, where anyone could come in and buy it. Some people took great advantage of that, and then some people, as everyone, some people dipped their toe in. But there was a lot, and that's just that 6% is just an example. We should probably change that to 1% for clarity. But you can see what I'm saying. So, but those are the only people that were tax exempt. That was the only non-Ponzi way to create a pre-sale, because a lot of pre-sales, the team takes something and goes and builds out something, so they pull some of that money, or they dilute the pool. And this way, and that's kind of what the team was saying, was like, there's not really another pre-sale like this, because it's truly to benefit everyone out there. I I don't think that most people realized exactly what it was happening, you know? So, and I mean, we probably could have pushed it a little bit harder and gone to several different AMAs as well. We just went to Jimmy's or James Felton channel and just promoted the pre-sale. I'm calling that again a pre-sale on his channel. But yeah, those are the only people that received that offer of a zero tax right there.
Very cool. So good to know. It's a very interesting pre-sale that people were able to get in on. And if anybody wants to see the audit, go to solidproof.io, go look up Nexus, audit ID 916. It's all right here. Links on the Nexus token website, thenexustoken.com. The Solidproof audit link is at the bottom. It's a great audit, as it should be if it's just basically a fork of the XUSD Surge token.
It is, yeah.
So again, that's why I said use code that is vetted in the wild if you can. Forking is a good thing if you have a good contract. And I think it's a good strategy for it, especially if you're building an ecosystem where it's going to be more than just this company pushing volume through it. You guys have all sorts of stuff here in the white paper for the Nexus token: staking, lending, yield farming, mining, flash loans. You're allowing people to use it for flash loans with a super low fee, swapping between stable coins. You're going to with a super low fee. So a lot of cool stuff that could potentially push a lot of volume through this as well. So if I only have exposure to the Pulse DeFi bot that's trading for me and I'm getting Nexus tokens, I don't get to my DeFi stuff every single day sometimes. Maybe I'll do some DeFi stuff once a week, sit down, claim all my stuff, swap things around, off ramp, this or that. Maybe I'll sit on the Nexus tokens for a couple weeks. And if you built out other businesses and utilities for it, then potentially I could just be sitting on an appreciating asset just to get even more. So I know I always point out the conservative or worst case scenarios first, and we talked about that 1% fee coming out if you were to sell your Nexus tokens right away. But if I sat on it for maybe 2 weeks, 3 weeks, 4 weeks, maybe instead of losing 1%, I gain 5% extra that I just wouldn't have before, just literally doing nothing and essentially risking nothing either, right?
Correct. Yeah, because all you're doing is just think of it this way. Like I think I mentioned earlier, we had a gentleman that bought 6 pins just so he didn't need the money. He just bought them to print. Basically, it's just printing off Nexus for him. It's essentially the way to look at it.
That's one way to DCA in, I guess.
That is one way to DCA in. He's got a printing press for Nexus tokens, and that's how he viewed it. You know, I'm not making that statement. That's just how he said it. And he's like, I'm just gonna let it sit there and build up my wallet of Nexus token. And he's like, I can see where this thing's going. You can see where this thing's going, Nick, because, well, you built it, Nick. But he's like, I know and I can see by the math written on the contracts and from the performance history that, I mean, it's kind of a no-brainer, Nick. And that's what he was saying. He's like, I'm going for it. I was like, hey, you do you. I'm proud of you. I'm happy for you, but you do you. And he's like, all right. And so he went. He's in it. He's enjoying it. And it's like you said, the XUSD token has been around for over 2 years.
Yeah.
And back testing, and I mean, it is a solid. I mean, DeFi Mark is just off the charts. You know,
he's
with his. Yeah. He is, yeah, and super great guy. And but yeah, I mean, we're excited.
I think this could be one of the best use cases so far for this type of token. This could be a behemoth for pushing volume through a surge type token. which
Yeah.
I have not seen before. I rode the MDB Plus token up like 16+%, doing nothing. And they didn't even really have much. They didn't have really much any real utility at all. It was just people's trading volume for a little bit of time, and I still made 16% just having that sitting in my wallet for not that long. Eventually, their volume dried up because they didn't have much utility. But I didn't. Nobody like you don't lose anything at that point. Now with this is almost as long as your business stays in operation. This thing should be pushing higher and higher volume every month for the foreseeable future, which is very exciting for this type of a token.
Yeah. And so now everyone can see, man, this was not just like, hey, launching this. Then we have this token over here that pays out on this token, which may go bloop, bloop, bloop. No, it's like a full on, it was a strategy to build this out. Yeah. What came first? We build this and just, think about this, 100 pence equals $20 million in prop funding, pumping into the contract, then pushing out into the Nexus token, which skyrockets the Nexus token, which people who hodl the Nexus token just.
Yeah. And just like you can do the math here and you can extrapolate out to see how much volume would need to generate the USDC in the contract to back this, divided by the total token supply of Nexus that is minted as people buy it. And you can determine like, hey, it would need to have this much volume over this period of time to double in price. Have you done those calculations? Do you know? Not my fear, but my concern was that I would get in the mentality of the compound calculator, which I swear, Alex, the Lambo calculator.
It literally came from Satan himself. That compound calculator, you just kind of like. So
I don't want to give anybody false hopes or anything, but I like to. I do like to talk out exciting possibilities and best case scenarios as well as even worst case scenarios. Because what if that does happen? It's if you're holding Nexus token, assuming everything is going rock solid with this type of token, which it has for years and years now, the price isn't going to go down. So it's essentially a stable coin. It's essentially a stable coin at minimum, but at best, it could be surging. Literally, that's why the name is Surge Token. It could just be surging up and up and up with more volume. So the way I see it, if I didn't need the cash flow right away for bills, and I just let my Nexus tokens accrue, as your one customer said, printing Nexus tokens with his bots. If I'm just printing Nexus tokens with my bots and I'm stacking them instead of selling them, let's say I sit on them. I don't know. I'm just going to make up numbers here, but let's say I sit on them for a year, essentially, and they double in price in that year. I don't know if that's possible or not. With the volume, again, I'm making guesses here, assuming your volume's just going to be awesome. Then instead of that 44% I would have made last month, that's essentially 88%. My profits have doubled because I made $2,242, 44%. But if that's in Nexus tokens that have gone up 100% in the time period I've held them, all of a sudden I've made $4,484, which is 88% in that first month that I got those Nexus tokens, right? And then each month after that, it's a sliding scale, like 100% from that first month. Maybe it's 80% that's from that second month. Maybe it's 60% from that third month, et cetera, as it's, as time goes by. But essentially, you see what I'm saying? Like you're not just making 44% a month. You're making potentially way more than that, depending on how long you hold the Nexus token.
That's exactly right.
Crazy.
Yeah.
It's wild.
Yeah. It's like I said, this was very much a strategy that was built out and planned, and it to be a catalyst for everything else that is. We have essentially one dApp rolling out per month for the next year, and we've got even the Nexus token itself towards the end of the March will have a yield farm. So
nice.
This will be really fun, Alex.
I'm excited. I really am.
Yeah.
And you can't pay me $1 million to pretend to be excited on here. I wear my emotions on my sleeve, if you will. So like, I am legit excited. This is super cool. Everything you've done here sounds really, really good to me. And I do actually want to get involved in the Pulse DeFi. And at first I questioned the whole Nexus token. But with this, if you're using the Surge, the XUSD contract, which no functions exist that could adversely affect contract functionality or asset value. Like I said, at worst, it's a stable coin. At best, it could be multiplying your gains, right? So if I'm making 44% per month and I hold it until it doubles in value, then that month I made 88%, which is crazy to think about. So I'm super excited about this, Nick. And I don't say that to everybody that comes on here unless they really have something that gets me excited.
Yeah. Well, we worked hard at this, designing this and this concept, and every piece of our ecosystem builds out on each other, just like the Pulse does with the Nexus token, and using the prop firm funds to pump into the Nexus token, which builds up the Nexus token's value, which then, as we have all the fund, which is a registered venture capital company, is then using Nexus token as paying in and paying out. And it just keeps on building into an ecosystem with all legit companies, which is how this space should be ran in the first place. So
I absolutely agree. I love this. I hope all these businesses in your ecosystem do really well. I think they all can work synergistically with something like the Nexus token. And I see why you called it Nexus. It's the Nexus point of all these businesses that connects them together and gives them synergy. I think it's a very brilliant ecosystem you built here.
Well, it's funny you mentioned that. The reason why for clarity there, the reason why I actually named it the Nexus token, I was reading a devotion one day, and it was talking about how God is the center point of everything that we do. And it was talking about how God is the nexus point of everything in our life, how he works all things together for our good. That's how I really wasn't thinking of like the ecosystem at that time. I was like, it just spoke to me. And that's where the Nexus token came from. It was how God is how everything is working together for our good. That's what he does. And he's the center point of our life and the connecting piece for everything. And so it was the devotion that I was reading, and that's where the name came from. And then I was like, okay, that's pretty cool. I'll go with that.
I like that. Very cool, man.
Yeah. So the name is the direct correlation to what is the center that holds my life together. So, yes.
I like that. So it has a very personal meaning to you.
It does.
As well as being analogously very well suited for its utility.
Right. Which I wasn't even thinking about, but yeah. I was like, yeah, that does make sense for the Nexus token, but yeah.
That's awesome. All right. So, Nick, I have a question about scalability of your business. Can you just scale this indefinitely? Because with the results we've seen so far, this is a slam dunk at the moment, in my opinion, if it keeps going like this for any length of time. Now, you guys have wave 1 that will be 100 pin holders. Is there a limit above that if you took on more pin holders that you guys would not be able to scale any bigger, or prop firm relationships would become strained. What's the situation there? Can anybody in the future jump into this thing, or will there be a limit?
Yeah, that's a good question, Alex. And, my answer to that would be that's why we take that pause. So that after wave one, we are each 100 pin holders, we have to bring on new staff to accommodate. I mean, you've got servers and the bot construction, and it's all time consuming, where you start to see that strain on the team a little bit is the more onboarding we have, the more automations we have. So like, remember when I said like, hey, there's that cost to construct the bot and there's very little profit up front. That's true, because we want to bring it to everyone as much as possible. That 20% on the back end, that may seem like a lot, but as you bring out employees and you're paying for more support team members, and it really doesn't turn into a lot right there. I mean, it's a lot of expenses that are going on both the front and the back end. So we can scale, yes. And part of that plan or strategy that we had, that we've been discussing as a team during our morning huddles, we kind of block schedule out our morning huddles, like we're talking about this for this long, et cetera. So part of that is after the wave one, we're increasing the cost to $7,500 per pin. It's not because we want to. It's because of that ever increasing. It's as everything is scaling upward, so are our costs, because we have to have support staff to build out. We have more server costs. We have to create more automations to be able to scale higher. Now, with that said, that is certainly doable. We have that plan in place, and we're moving in that direction. Whenever we move to another wave, like wave one, we're bringing on the majority of it to where we have a lot of bot firms that we can use HFT bots to pass the challenges, like we discussed at the very beginning. Wave two is we're going to do a little bit more of a blend, where you have more like FTMO, where it mimics. It takes a little bit longer to pass, but it's bringing in new liquidity pools with other HFT bot passing firms. And so that'll be wave two. So then wave three, a little bit new liquidity pools. We're constantly cycling those prop firms to make sure that this lasts long term. Now, to say how long will we feel comfortable taking on new growth, predictably, we're kind of looking at wave three. We're going to say, okay, we're at a point where that point, with based on our current prop firm pools that we have, not pools, prop firm, just prop firms in general, those lists that we had, is we're going to set, we'll have to take a hard stop at 3 waves to really take a look at other prop firms out there. But we're constantly moving in the direction of innovation and constantly looking for and reaching out to our communities of other bot building communities, the other communities that specialize in expert trading, where they say, yeah, these prop firms are good. Stay away from these prop firms, because there's good and bad ones. Every prop firm that has a Trustpilot review out there pretty much has a negative review on it, because people can't trade within the prop firms guidelines. And they certainly don't have our bot, because otherwise they would be in the post and they would be complaining. I'm not trying to pat myself on the back. I'm just making an honest statement here, But so, So I mean, we do have plans for scalability. We have, again, everything we do. It's a chessboard. Sometimes we're thinking 12 steps ahead, while the other part of the team is thinking 3 steps ahead. So, I mean, we're always just kind of moving around. We're very big on check or strategy and how to make, hence this ecosystem. It's all intertwined. It's all more than anyone can ever realize. It's like, you see those like animated TV shows, like what was it? The Warner Brothers, where they were Wacko, Yakko, and Dot back in the 90s. If you ever watched that show, like with Looney Tunes and everything, where they're seeing all these different equations in their heads and everything. That's kind of like what the team is. We're on that edge of we're like Pinky in the Brain. One's a genius, the other's insane, that kind of stuff. Yeah, that's exactly us. We're on that cutting edge. We're walking that fine line, but we love this space. We love the fact that we're able to help people, and we have plans to go the long term, and we get up every day invigorated by the fact, okay, what can we build out today that no one else has even touched or they haven't thought of? And we have the best developers, and we have the best support team. We have the best engineers. We have the best, I have the best advisory board, and I don't know if I mentioned this in the AMA, but I have an advisory board over me that tells me essentially, hey, that's a good idea or that's not a good idea, and because there's wisdom in the multitude of counselors. And so if that's where we have any failure in DeFi, we look at and we're like, man, that's a good idea right there, because we can learn from it. Not like the failure was a good idea, but the where that chink in the armor was, then we take that and make sure it's not in ours. And we find where there was a problem, we find the solution and make it better. And that is the approach we take. And that's we work the problem to find the solution before our problem ever even happens. There's no point in trying to, if you can't look at the person next to you and say, that was a problem they had and learn from it, then there's no point. That person shouldn't be in the space if they can't learn from other people's mistakes. That's just life. So that's how we're approaching this. It's very, very dynamic, and we're energized, and we have plans for long-term growth.
Okay, so your scalability strategy is very strategic. You have multiple advisors when you hit 100 pin holders, which completes wave one. At which pin holders in wave one, it's $5,000 to get a bot and become a pin holder, and after that, and wave two, from pin holders 101 to 200, you guys will most likely raise the price because of scalability costs for onboarding with that many customers to manage and bringing on new staff and automating new processes. At which point, wave two pin holders will be $7,500 each. So roughly the price goes up 50%, which, I mean, with the returns you guys are making, $7,500 to me still is a crazy, incredible deal. I mean, it's not even a question. If you're making $2,000 a month off $7,500 in the ROI in less than 6 months, and it goes for years and years and years, that's probably the best deal in town if everything goes according to plan, in my opinion. Not financial advice, blah, 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 but still, that's just to frame things in perspective. If you guys are going from $5,000 per pin holder in wave one to $7,500 per pin holder in wave two because of scalability cost increases, and then in wave three from the 201 to 300, those pin holders. Then at 300, you might have to pump the brakes and evaluate scaling the access to more liquidity with other prop firms, at which point you onboard more advisors and prop firm traders to evaluate additional prop firms to find which ones are really good and bad to onboard, to unlock access to more prop firm liquidity, to bring on additional pin holders beyond that point. And you guys are always thinking strategically to figure out how to scale this thing as big as possible indefinitely. However, it isn't a very it's not a straightforward, simple process. There's a lot involved in scaling this business model because in DeFi, a lot of people get in their heads, oh, if I make 2% per day off this DeFi project, I'll be a billionaire off $1,000 in 2 years. That's not realistic. And if you're doing 40%, 44% a month, that's like 500+% APY each year. That's a 5x in a year. And then, people will be trying to compound that. So like they'll be trying to roll that into more pins. I know I was asking you earlier off camera, like, could I just compound my pins indefinitely and have dozens of these trading bots just reinvesting into more and more of these trading bots? Is that realistic? And what if everybody else was trying to do the same thing? And that's when you started saying, well, we only have access to so much prop firm liquidity, and it's very strategic how you expand that access to more liquidity. So in this situation, it's kind of like a first come, first serve with the trading bots, right?
Very much so. Yes. Yeah.
Yeah.
And as we explore expansion, we are also looking for additional prop firms, but it is very much a first come, first serve, because we want to make it available to everyone. Like I said, we wouldn't be raising the price unless it was a scalability requirement. In other words, to make sure that we're adequately serving everyone and to make sure that we're adequately staying on top of maintenance and construction and all these things. Because we can't raise the 20% subscription fee on the back. That wouldn't be ethical. So we'd have to raise it on the front so they're synergistic of each other, because 20% on the back subscription fee isn't a lot when you consider all the costs and expenses that go into this. So it's
really not. I did the math myself. If you guys maxed out the wave one and you guys were making 1 or 2% per month off of $20 million, and then you're taking 20% of that 1 to 2%, it's like 40 to 80 grand a month. Just doing mental math off my head. And to run a business with multiple employees, engineers, expenses, operational costs, maintenance costs, servers, coders, everything, marketing, it's really not that much. It's really not. And that's why I had to ask your scalability plan going beyond wave one to wave two. And that makes sense. So you have a strategy that later participants or customers in wave two, you have to increase the cost to onboard them to make sure that this is scaling as best as possible with both the customers and the business in mind. And that makes a lot of sense. So $5,000 for wave one pin holders. After that, $7,500. And then beyond that in the future, you guys obviously have to run your calculations and strategize. So who knows? But like right now, $5,000 is crazy cheap for what this is. And it is, for the competition, the next best option is 20 grand. And then after that, 50 grand. Like, it's not like we regular retail people like myself out here don't have access to these kind of opportunities, which is why, like, first come, first serve, only 100 pin holders are going to get the $5,000 price to get one of these bots with access to the prop firm liquidity. After that, 7,500 for the next, 1 or 200 people. And then after that, you have to reevaluate. So obviously, like, these are going to get eaten up super fast.
Right.
I don't know, maybe in the next like month or two, these are going to be eaten up. Especially once those first payments go out and people start going around telling everybody, hey, yeah, I bought this trading bot and I made $2,200 in the first month. Minimum, like it's already past that, and it could be more. If people are saying they did 44% or more in a month off a trading bot, these are gone. It doesn't matter what they're priced at, these are gone. Yeah.
That was our predictions in our based on in-holder purchases thus far.
Yeah.
even the current existing pin holders are seeing because everything is transparent, they can see all the trades. They're like, oh, this thing is legit. It's like, and they can see the profitability and everything. And I think, like I mentioned earlier, there's a gentleman that was like, hey, I'm making like 50 at the time. He was like, it's $5,700 that he made so far. And that was like a week ago, and he's crushing it. And, and I was just like, I was like, well, that's what it was designed to do, was to make this to where it was accessible to everyone, and it wasn't restricted to the elite or the super exclusive type of situation. This is, just the sheer time that we put into the strategy and the design of this, meaning the ecosystem and how the positioning of everything and the Nexus token. And, like you said, this is almost a perfect use case for a surge token. And this was built specifically for this. This ecosystem is built to be legitimate, long-term, to help people. And that's the true heart behind it. That's the true functionality. And
Well, that's amazing. And I'm going to get on board with this and get in for that first 100 pin holders, wave 1, because like you said, wave 2 is going to go up a little bit in price for onboarding costs. But again, I believe that's going to be negligible because of how well these are performing, and the fact that you basically unlock $200,000 to trade with for a very small amount relative to that. That's really, like, that's an amazing opportunity. And I don't say that lightly. Like, you can go through every AMA I've ever done. I think I may have ever spoken those words like a handful of times, and maybe once or twice, actually. Like, I get excited about things and I say, yeah, I'm going to participate in something. And I often do after some of these interviews. This is really great. Like, I've been trying to get into prop firm trading for a long time, but I'm like, I don't have the time to try to pass the test or whatever. And then people are like, oh, I'll pass the test for you. Just pay me this or that. And I'm like, I don't know you. You're just some random person. I don't know about that. But this, you're a registered business. You've got a track record of multiple months now with your beta testing. That went great. Wave 1 is killing it right now. Obviously, they're selling super fast. So,
right.
Only 100 pin holders for wave 1. That's probably not going to last more than like another week or two, especially once those first payments get claimed. Those are gone. And then wave 2 and 3, you're going to be having to strategize, finding more prop firm liquidity probably really soon.
Really soon, yeah.
But that's a good problem to have if you're a business. Scaling, if your problem is you're growing too fast, then that's a good thing. Obviously, there are still risks inherent in growing too fast as a business. You do seem very competent as a business owner. I know you run.
Thank you.
You run many businesses. Yeah. I mean, talking to you, I can tell you've run many businesses for a long time. I can tell when people have business experience and when they don't. You're not a 19-year-old DeFi whiz kid who thinks he knows everything out here and, blows up a business in 2 months. I'm hoping you steer the ship correctly. I always say, any centralized business, the biggest risk is always management and execution risk. So, if you're steering the ship, I do hope you do it very wisely and for a long time to come, because if I'm in wave 1 here and this thing lasts for a year, I'm jumping for joy on a 5x, like potentially turning $5,000 into $25,000 is a big deal for somebody like me.
Right.
And then if it just keeps doing that year after year, for however long you guys keep this going, I'm gonna be a very happy camper. I'll tell you what.
Yeah, and that's the plan. It's and that's why we specifically launched this one first, was because it's using prop firm funding to continually, I'll emphasize that, continually pump up the Nexus token price, which is then utilized by all the other companies that are following in the months to come and continuing into next year. Is we are just, that's the sole token that we will use, is the Nexus token. And because the Nexus token itself is, you can see it as a product. It is a registered company as well. So we're not going anywhere. We're strategizing. We're, like I said, we get in what we call our, like I think I mentioned this earlier, was our daily huddles. Then we get in and we take care of business. We are here digging in and making sure that this is a long-term thing, because our families are behind this as well. It's not just like, hey, we're building up something and we're expecting it to go out in 12 months. No, that's no way to run a business. That's not an equitable exchange for people. It's, we're going to do our best to make this long term, and that's our goal. Then
I know DeFi is like dog years. I think I heard you say that at another AMA.
DeFi is like dog years.
That's a great expression. So, 2 years, I can see 1 year, no problem. 2 years, probably no problem. How long do you think this business could go on for? Like, if I am a customer and I have a service agreement with you, realistically, how long could that bot run for?
So that's a good question. Excellent question. One that we have been asked before. One of the things that Kingstone Investments, my venture capital company, is building out is an AI bot to be finished up in Q4 of this year, to where it's familiar. Are you familiar with AI at all? ChatGPT and the functionalities and stuff like that.
Absolutely.
So this particular bot, some of the newer AIs, and I'm talking neural network, not knowledge base, set knowledge base stuff aside for people that need to know the definition. Knowledge base is where you're taking a bunch of data, basically, and pumping it into a bot, and you ask it questions, and all it can do is pull from that knowledge that you pumped in, and that's all it can do. Neural network is very much like ChatGPT. To give an example, it is built around like the framework of the human mind.
It's self-correcting and optimizing.
Yeah.
Yep.
Exactly.
It's doing something, depending on the result, it makes a slight modification, tries again. If the result is good, it keeps that modification, and it just keeps doing that and optimizes for the best possible result in a given scenario or environment of variables.
Yeah, exactly. And so this new model that we're developing is where some of the newer models, it can split into multiple personalities. The model that we are building out now, it's a 4x decision engine, and it's a bot that it's essentially paired with the trading bot, but the AI helps complement that trading decision. And so it'll split into different personalities. Like, one will take in the current market conditions, one will take in the weather conditions, one will take in the maybe the shipping lanes or NOAA activity, NOAA meaning oceanic activities, weather pattern. You said, and then it comes back together and saying, then also the news and all real life feeds, which ChatGPT doesn't have, come back together in a matter of nanoseconds to make a decision. That is what is under development in the next iteration to make things long term, as well as, and that's something that we are having to be finished out by Q4 as a prediction. Obviously, as everyone knows, technology, sometimes there's a few months in delay. Let's put it that way. So expect, we are expecting Q4, but that we are constantly working on improvements. Even with our passing challenges for like FTMO, we are developing out new bots to pass those quicker instead of having such a longer lag time, which and then if we pass them quicker, that means they're trading faster, or not trading faster, they're getting to their funded phase faster, which means it's pumping more money into the contract, which means faster ROI, which means lasting longer for longevity because there's constantly money going out instead of having such a long delay where it's causing strain on any type of system and set in place. So we are constantly evolving the bots and building new ones and different strategies to keep it going. And innovation is one of the key points of our strategy as well.
Very, very cool. That's a great strategy. You always got to stay on top of the trends in technology as a business owner in the tech space. And that's awesome. That sounds very cool that Kingstone is developing AI technology like this. And will you be implementing these into the Pulse DeFi trading bots?
That's what we are looking at, yes. And so obviously once we get it in active and in a sandbox and we're able to test it out in sandbox, you know what I mean?
Yeah.
To make sure that we're not just going to roll it out as soon as it comes off the line. We want to make sure that it has some good testing or back testing to it that can handle prop firm guidelines. But that is the design of it, is to make more efficient trades in what it's doing. And better decisions where it's not just knowledge-based, because again, knowledge-based is great for what it is, but it's still based off human experience and it's not learning as it moves along. Then, so this is one of the concepts that we saw was the next iteration, which we know several other institutions that are building the same technology. And so it's always a rush to make it before the next person, the next company does. It's just how venture capital goes. If you sit and not do anything, nothing ever happens. Yeah. But if you step out in that direction, step by step, if you take a step each day, it's that 20-mile march. You're always going to be ahead of where you were yesterday. So that is how we view this, and that is how we are progressing.
So those advanced trading bots that will be using the AI neural network powered technology, once everything is vetted and tested thoroughly in a sandbox and back tested and all that, once those roll out to new pin holders in the future, as expansion continues at that point, is it safe to say that old pin holders, with their old-fashioned high-frequency trading Forex bots making their 1 to 2, maybe to 5% per month, is it safe to say that if you gain efficiencies in trading with those AI-powered bots, say next year, that new pin holders, if they have increased profitability, say they're doing 5% on average per month, maybe they, let's just making stuff up, but let's say they are more efficient and better traders. If they do 5 to 10% per month, and then, multiply that by the prop firm liquidity that it's trading with. So really it turns into 40 times that, and instead of making 20 to 40% per month after you multiply that in for the 1 to 2%, instead you're making like 200% or more potentially per month. If those are really ripping, is it safe to say that those pin holders with those bots would raise up the overall average and the overall payouts to every pin holder involved.
That is correct. Based on that hypothetical scenario, correct.
So I'm just trying to, I'm trying to game out if these AI bots are better and they trade better as a first mover here who's got a bot that's doing its thing and it's still performing and everything. Will I be made obsolete by your new fancy bots and these new pin holders that come in? However, based on what I saw in the smart contract with the mathematics and how rewards are aggregated and then divided among all pin holders, that what is happening is any increases in trading profitability for any new bots you guys come out with basically raises the profitability for every pin holder involved, correct?
Correct.
Awesome. I like this plan. I am for it. I support this.
Okay. All right. I figured you would be. I was like, yep, we are thinking long term down the road.
Yeah.
And next iterations and how to advance the not only the space, but the whole DeFi. And we, like I said, we are customer service based, and it's not a, do I see an end to this? No, I don't. I mean, I'm not trying to be like overly optimistic, like this will run forever.
Mm-hmm.
Because I can't make that promise, nor would I. But what I can say is that we are continually making pivots to advance it to where it does stay as long-term as possible.
Yeah. I like that mindset, and I like that any new enhancements that come in that are more profitable benefit all holders, all pin holders. I guess in terms of longevity of myself as a pin holder, how long do you think my bot would run for if it was trading well? Say it kept doing 1 to 2% on average. Maybe let's say it does, or 1 to 5% or whatever. Let's say 2% on average after the fees. Let's say it keeps doing that 2% on average. Obviously, multiply that by all the capital from the prop firm. So let's say it just keeps doing its thing. And is it realistic to think that could go for years without the prop firm like saying you're out of here or something like that?
So yeah, in perfect conditions like what we're talking about, where you just let the bot run, obviously that's why there's a subscription fee there in place, so we continually update it. Let me put it this way, if we didn't update it and make adjustments and everything, then it wouldn't, that scenario wouldn't be possible. But considering that the team does whatever, the market's closed on the weekend, we come in and we update it with set files and make sure that everything is moving accordingly and working properly, then in theory, yes.
Okay. And with prop firm risk, let's say I choose to go with this prop firm, or I only have this option at this point in time when I sign up. Would I have more risk with my bot than, say, somebody that ends up with what did you call it, FTMO prop firm later down the road, more established or something? Is there a way that you guys level out that risk for people, or is it just kind of like you got this prop firm and that's it? Like if it blows up, if that prop firm says, oh, we're going out of business, or we don't want to do this anymore with this kind of an account, is that just kind of like, well, better luck next time or try again? Or are there any concessions or insurance policies in terms of prop firm risks?
So I'm gonna rephrase it, so make sure I understand it correctly. So essentially, if a prop firm shuts down, as you're asking,
yeah.
So whenever you go in, whenever a pen holder goes in, they select their own prop firm. They do their research. They do their DD or their due diligence, whatever you would like to call it. with that said, the bots are in such a way that they trade like humans. So sometimes you might have winning days, and sometimes there may not be winning days. So on average, they pull about a 70% win rate, which is really good for prop bots. Yeah. And so it's hovering right around 68 to 70% win rate. That's not with all bots, let's put it that way, but the majority of them are running that way. Some of them run slower than the others. Some of them run, faster than the others. I don't want everyone to think like, man, I could get this and get the $5,700 like that guy did. No, it doesn't work like that. They're unique. So even if when you purchase a pen, it will be different from that gentleman's. There's no way for it to be the same. And so, if a prop firm goes away, the insurance policy, quote unquote insurance policy that we've built into the subscription agreement or contract, sales contract, is that the only thing, if you want to look at it that way, is that the pen holder would be responsible for is paying for the new challenge. We basically rebuild the bot and we pass the challenge for you at no cost. So it's kind of another risk mitigation policy that we have in place. At the same time, it's to where like when you look at this from a potential pen holder purchase, it's like, okay, let me calculate all the costs. I could go put 50,000 in stable fund and watch that go, or I could, you get what I'm saying? You're dumping capital into something and it could continue to go down, or that kind of stuff. But this is a one-off purchase where, hey, the only thing, if hypothetically something happened to a prop firm, you just be responsible for paying for the challenge again. We would take care of the bot and pass the challenge for you. That's not a bad deal right there.
So you would just in that like scenario, prop firm goes out of business or just says we're done with this. Then you guys, like, you still have the server set up, you still have the bot and everything, and then the customer would have the option, if they want to continue, to basically pay for just the prop firm fee to retest with your team of test passers. They would just pay the prop firm test fee essentially for a new prop firm to get their bot trading on it again on a different prop firm. Wow,
yeah, that's correct.
That's nice. That's nice. That's good.
Yeah, that's the insurance policy that we were kind of discussing. Was I mean, however you want to call it, but that's kind of the built-in, like, hey, this is customer base, and that's how we have it set out. And one, because we have confidence in our product, and again, not every day is going to be rainbows, sunshines, and unicorns, cupcakes, but we are here to make a difference. And that's how we, from an insurance, like what you're saying, an insurance policy or something like that is our policy right there, is to, if something goes wrong, all you got to do is pay for the new challenge. We'll take care of the bot, wipe it down, rebuild, and then pass that challenge for you. So that is how we decided to move forward as a team, to make sure that we were providing quality to all of the customers or the client.
That's really cool. Would that also be the case if the bot malfunctions or trades out of bounds for the prop firm's criteria, and the prop firm decides to shut off that account or close that account? Does that policy still work in that case?
Yes, it does.
So I wouldn't if I wanted to like get set up again, it wouldn't be a whole nother $5,000. It would be as an existing pin holder, I could basically transition to a new prop firm and just pay the prop firm fee itself.
Correct.
Generally, how much are those? If you had to approximate an average,
an average would be right around 1,000.
Okay, that's not bad. That's especially if you're making $2,200 a month off what it. I mean, come on. And so I'm coming up with my risk reward profile here, right in my head,
right. And that's kind of what we had to do when we designed this out. How do you mitigate the risk versus the reward? And so that's why it's designed this way. Just like being attached to an appreciating stable token, such as Nexus and a surge token, that was part of the risk reward profile that we built out. I
love it. So, if my bot's running for that 1 month and it does well, like Wave 1 has done so far this past month, they've done $2,200 approximately already. Then let's say that happens again, hypothetically, and I've jumped in. Then let's say, okay, I just got $2,200 worth of Nexus tokens. All of a sudden, say my second month in operation of my bot, a glitch happens, or it trades out of bounds on a weekend, like something, freak accident. Prop firm said, you're out of here with my account. Well, I just take approximately, depending on the prop firm I end up going with, let's say around $1,000 or something of that 2,200 I just made, and I just say, here, will you guys set me up on a new prop firm with my bot and the server that's set up for my pin that I have in your system and our contract? And you guys would say, yeah, sure. And in that case, I'm still already up. I've still got $1,200 profit in this hypothetical example, or returns, I should say, $1,200 of returns. And then I basically didn't have to take anything else out of pocket extra, essentially, in that case. And that's a small window. Like I just said, that's like a 1 or 2 month freak thing. It seems like that's very unlikely given what you've told me. So that's good to know when I'm painting out my risk reward profile here. And that's a cool policy you have where it's not that hard if you're an existing pin holder and customer to jump into a new prop firm if something were to go awry with the prop firm aspect of it. And you could just reutilize the resources with the server and the code and everything. I think that's a really nice way to go about it. It's, instead of making somebody do another whole $5,000 for a brand new setup, which, it would be totally understandable or justified if you did that. I thought that was going to be the answer, by the way. So you caught me off guard.
Well, I'm glad I brought that surprise to you. I mean, hey, I mean, I work with what I got. What can I say?
Well, that's cool. Because that's a good. I think that's a good way to do it. So I guess that covers my questions with the prop firm risk. I got some technological risk questions. With your servers, are you willing to disclose where they are located, or at least what kind of facility? Do you have a data center somewhere, and is it geographically redundant? All that good stuff. What's that look like?
So I know our servers, they're located all over, but the specific ones are located for Wave 1 is located in LA, so in Los Angeles. So what if the San Andreas fault opened and ate the data center? What then? Well, we do have daily backups on the servers. Okay. Does that give you any little more boost of confidence on that? It does. It does. Okay. Would I be affected at all, or would you guys handle that freak incident and just take your backups and set up in a new data center or somewhere else? We might have a little bit of a time down on Wave 1 to get everything running back. Just if the San Andreas fault just kind of LA. That would be what we're kind of looking at there, Alex. A little bit of time down to get everything running, 100 servers, 100 pins. Yep. To getting it all back up a line. But yes, that is part of the part of the subscription agreement is to where we take care of the servers and that everything is operating as smooth as possible.
Yeah. Well, that's good to know that you guys have a data backup and redundancy plan and all that for those freak events. Cause things happen, earthquakes, hurricanes, fires. Do you guys have an insurance policy for any of that stuff that would help you guys with the costs on that wouldn't break your bank so this thing can be as profitable as possible on your end as a business?
So our company does carry insurance, everything from cyber attacks to terrorism coverage, the standard TradFi space coverage, because we are a software company. So we carry insurance. So that right there is our, if that's what you're referring to.
Yeah, absolutely. That is exactly. And I know I read through your insurance policy and everything like that. So that's where I was going with that. Are you guys covered in the case of like, something happening to your servers or anything? And, if the expenses were, 5 or 6 figures to relocate or do something, I'm just making numbers up. But again, a small business just getting started, that could, put a wrench in the spokes, so to speak. But if you have an insurance policy that covers stuff like that, then you guys, as a business, will be totally fine. And there'll just be a little bit of downtime as you guys set up with some new hardware somewhere, right?
Yeah. And then we just, MailChimp everyone, or mass email everyone updates. Probably should have clarified that before I said MailChimp in case people don't know what that is.
I knew that. I knew exactly what you meant. Yeah. Yeah.
Okay. I'm glad we're tracking here, because I was like, that might sound a little odd.
Yeah. I use MailChimp for some of my email newsletters. Yep.
Yeah. Awesome. Okay.
Well, good. No. So you guys do have an insurance policy for all sorts of stuff. If anything were to go wrong. So that really covers a lot of the technological risks of the server farm. You got 100 different pin holders. That's going to be 100 different server instances that has to each have their own IP address and everything, from my understanding. And
correct.
That's good that you guys have that covered. If you guys need to do stuff, a lot of people don't have insurance like that. And so good for you. All right. So I think that covers a lot of my technological risks. We covered the kind of the trading risks with the bots earlier when we talked about your diversification strategies, drawdown amounts, and all that. So we covered that pretty well. I think this is a great little business you've built here, man.
Thank you.
It really is.
Yeah. Thank you so much. Yeah. We, the Nexus token will be my 4th kid, because my dog is my 3rd kid.
I can relate to this, man.
Yeah. And, this, just, we look at this as an honor and a privilege to serve people. So, truly.
I love it. I think it's very cool, especially if you can help. If you can help people make some money. And prop firms, I think, are one of the few realistic ways for people to make gains like this outside of riding the bull run wave or outside of trying to trade on leverage. I think prop firms are generally the only other option, other than maybe buying businesses and flipping them, or trying to fix them up, or starting a business of their own. But if you're out here just looking to put some money into something, prop firm trading is a way to go. And if you suck as a trader, this is a really good way to go to get into prop firm trading.
That's awesome. Yeah. All right. That is true.
Yeah. Cause I know if I, was qualified as a prop firm trader, I passed the test. I would bungle it. In that 21 days, I'd get emotional. I'd be like, I'm trading with $200,000. Oh my gosh. And then all of a sudden I'm down 10% in a day and I'm out, right? Like,
Yeah.
so I think this is cool. It's probably the only way I'd be able to realistically do prop firm trading with my impulsive nature.
That's awesome. Yeah, I mean, I'm glad that we're able to bring a consistent, and when I say consistent, comparatively to the DeFi space, what you say in traditional DeFi space. I mean, but you get what I'm saying.
Yeah. I haven't seen anything like this out here before. I've seen some NFT projects that talked about giving exposure to their prop firm traders, profits and stuff like that. But again, it's not very transparent because you're just like taking their word for it that this trader did this or that and put it into the reward distributions that go out to the NFT holders and stuff. Like, it's a cool idea still, don't get me wrong. But again, you're relying on another person, a trader or a team of traders, which can be fine. But I think that there's still a lot of risk involved and trust there in other people. Whereas this way, you kind of have your own hand in building this bot from what it sounds like. And then on top of that, you get to pick your own prop trading firm. Now, one question I always ask people is, what do you think is the best strategy for somebody joining the Pulse? What do you think is the best strategy, Nick?
For specifically what here, Alex, on strategy?
Say somebody new like myself wants to become a pin holder. If you were to become a pin holder yourself, if you wanted to buy a pin and set up a bot and a prop firm, what would your strategy be? Is that something you're able to talk about?
So my portfolio consists of short-term, long-term, mid-range type of investments.
Yeah.
This one, I actually would probably buy. I mean, this is just me. Not can't speak for anyone else. Alex, this is just me. I would probably buy multiple bots and then have one or two that just ran and just accumulated Nexus and then took some more home, like it's cash.
Yeah.
So had consistent cash flow. The reason I say that is because the predictive models are going to say people are going to be off-ramping or exchanging for USDC and off-ramping through our Spritz off-ramp on the Nexus token site, which is coming out soon. So it's one is a long-term strategy, part of that. And then two is you're taking the profits home to realize the gain. I would never recommend that someone, it doesn't matter whether it's a pulse bot or if it's any type of investment, to just let it sit there. You take some profits home to take a gain so that, one, you psychologically don't get frustrated. Because I remember this when I first started in this space, I did that like, compound. Oh, let me compound a little bit more. And then it blew up. And then you're just like, it's slowly but surely I started taking money out. I was like, all right, I'm feeling okay. I'm going to take my wife out on a date with this money. And, where you actually realized and you saw a beneficial something in your reality that helps your mind have an understanding that, okay, this is hard cash that's coming in, or from any, this is the recommendation for anything, always have a realization that you're taking home something and it's to where you're going to see a result in your own life, a positive result. And so beyond just the financial opportunity there, it's a mental mindset that it's not going to make you frustrated. or it's not going to make you upset every time you look at your Nexus growing. If all you did was hodl it, which that's awesome, by the way. I'm not saying don't do hodl Nexus. I'm just making a general statement here. It's just, I'm saying take some home, hodl some. Summary.
Yeah.
So that's what I would do if I was someone,
Although if I'm hodling Nexus, I'm going to tell you to sell your Nexus. So my Nexus becomes worth more.
That's right. Go ahead. Just sell your Nexus. Really, it's a good idea.
You should take more profits home with you and let me sit on the Nexus a little longer. Let me know after you sell. Then
let me how.
For me, for instance, I would probably take part of this and pay off my mortgage payment, and then take the other and maybe keep it in Nexus for a while, for a couple months. And I would just do that every single month. Especially if it's doing $2,000, I know that's, I don't know, I can't guarantee results here, but if this was doing like $2,000 a month or even 1,600, I would take half of that, or I'd take more than half of that, put it on I would literally use that to pay my mortgage. I would just be sinking that into my own home ownership. And that is as real and tangible of equity as it gets for me. And then I would take the rest and I would just leave it to speculate and grow on the Nexus token. And at some point, if I needed that, it's super easy. I could just sell it at any point. But at the same time, if I was able to sit on it for 6 months, maybe a year, maybe that extra that I've saved up doubles in value, or at 50% in value, who knows? Any percent gain is awesome.
Right.
So yeah, I totally see what you're saying. And then maybe I would sell it at some point if that bag gets big enough, and maybe try to get another pin. If there are some available. I know these things are gonna be gone real quick in the next couple months. So if you guys can keep scaling and making pins available at that point, then I'd probably be trying to get some with some of my gains here. But if not, then I'd probably sit on it in the Nexus token or put it in the Bitcoin or something like that.
Yeah. I mean, it's I think this is of course, I think this because I designed it, but that's neither here or there. I like the way this is designed as an ecosystem. And I like how just the sheer fact that it's a one-off investment. There's been so many times where I put money continually into something and lost capital. Whereas if I went with something that at least had the strategy from a business standpoint of being long-term, I would look at this and I would think that this is a lot better than a lot of the other platforms, I guess you would call it, in the DeFi space. So this is specifically geared to be long-term, to bolster an ecosystem, to be the catalyst of it. So it's exciting to me. And of course, I mean, I'm designing and building it. And so I'm just passionate about it. Yeah.
Well, I like I said multiple times, I think it's a super cool business model. And, I'm hoping that a customer lifetime experience in this thing is 10 years or more. If that happened, even if I had to pay $1,000 here and there, if I had to switch prop firms like a couple times over those 10 years, if this thing's doing anything close to these numbers that we've seen that it's been doing, then that will be a wonderful 10-year play for me. The most profitable I'd probably ever had on any kind of investment, even though I know this is, I don't want to throw around the term investment out here, but for anything like 500% per year potentially in a trading bot, obviously, it's not infinitely compoundable because of scalability issues. It's first come, first serve to get a trading bot here that has access to this amount of prop firm liquidity. But man, if you could keep this going for 10 years, I will drive to Oklahoma and shake your hand, sir.
That is the goal, to have you drive to Oklahoma. We grab some grub. So yeah, you get it.
I'll pick you up. We'll head up to Jimmy's place and we'll throw a party.
Yeah. And you know, we'll have fun, make it super awkward for Jimmy. And then yeah, I'm gonna go on and get myself in trouble. But so yeah.
Well, yeah. Do you think that could be realistic though? That a customer, that you have a customer relationship with one of these pin holders. Say I'm in here for 10 years. Do you guys think you could remain in business? And even if I had hot prop firms here or there, do you think that could potentially be realistic? I know DeFi changes like crazy out here, but let's assume the Binance Smart Chain sticks around in this contract that you guys use. Is this realistic? And would you upgrade smart contracts or move them to other chains in the future if it would benefit everything? Is that a realistic plan? Right.
That's a good question. So as with any business, there's always going to be pivots. There's, any business that says they won't pivot or they're running something perfect, they're full of crap. Absolutely. So I'm just going to say it a lot. There are pivots every single day in a business that you have to make it run. It's just no one knows about the pivots, and they don't want to know. And it's because it's not their business. It's your business, and your business is to make their business excellent. So you noticed how I was using very different definitions of business throughout that entire sentence structure. It made it really confusing for anyone who wasn't English. So, but do I think that the pulse will be around in 10 years? Absolutely. The Binance Smart Chain, I don't know. Which is, one of the things that we our Kingstone is looking at right now is potentially building out in the next 2 to 3 years a blockchain for a client, part of which are kind of our requirement is to allow us to build out our own, which move all of our current, or at that time, platforms onto our own blockchain. I know that to most people that sounds like really far-fetched, but in our world, it's not,
It's not.
And so it's one of those things like, the specific client who wants the blockchain built out has a specific use for it, and they wouldn't care if we ran our stuff on it. As especially considering we're the ones that are spearheading the build out on it. So, we have lots and lots of irons in the fire, and we immensely enjoy what we do. We don't build out things for the short term. We are constantly pivoting to make sure that everything is on a daily basis is adhering to our long-term goals and our long-term plans.
Yeah.
So I hope that answers your question right there. Yeah.
So you would do whatever it takes, pivoting and all this stuff. It sounds like to retain a customer, and with say a pin holder here, you would do whatever it takes to retain them and maintain that relationship through whatever business challenges you have to navigate over the years. Is that accurate?
Right. Yeah, that it's accurate to the extent that I always tell people we will do absolutely what we can within our power to make sure that a customer is happy. There are some things that are not within our power, that
like regulations. If something came down legally,
right.
That's obviously very hard to pivot around, but it not right. It's not. It depends on the situation, but I know what you're saying.
Right. Yeah, you see what I'm saying. There's not every. I don't want to put my word out there unless I am 100% certain. But I will say that we will do whatever is in our power to make that customer happy, and given the circumstances that they're in.
do you ever plan to sell this business?
No.
Okay. Okay, good. Also, do you have a continuity plan in place? Say you decide to retire because you did so good building all these businesses. You're like, I'm gonna go live on a beach in Thailand for the rest of my life, sipping mojitos. Is there something in place where you could be replaced, or is there any key team member that is irreplaceable?
There is no team member that is irreplaceable. Not and even myself, even as the founder and the designer of this, I am, how do I say this? There's no one not replaceable. Yeah, there's no one not replaceable. We have continuity plans in place, specifically with the board of advisors I mentioned. There are things written in place through the law firm that we use to maintain that continuity and to maintain confidentiality and to keep the customers and clients moving in the right direction. Again, there might be a little bit of downtime while that continuity is in place, but it's still at the same time, it's there to make sure that the clients remain happy and they remain whole.
Yeah, and that the team and company they have jobs that can keep support their families and all that. Yeah, so good to hear that you guys have those plans in place. Trust me, a lot of projects in this space do not have anything. Most of them haven't even thought about it. When I ask that question, they're like, "Oh, I've never thought about that." And I'm like, "What happens if do you have what happens to the multi-sig if somebody gets hit by the proverbial beer truck next week and you guys could no longer vote on stuff? Like, do you have a process to get a new person on the multi-sig? By the way, do you have multi-sigs and do you have processes in place to manage
multi-sig? Yep. Multi-sig, obviously through Safe Wallet, this, the typical multi-sig that works with that. So yeah.
Okay.
And that is, multi-sigs are great, but they also sometimes a pain.
Yeah.
But that's what they're there for, is to make sure that there is safety and continuity in everything that we have moving along. So we've got we have backups in place for everyone, and everyone knows where to find the seed phrases, and they're kept in secure locations to where it's accessible by certain team members, so things can be just transferred over with once it is given from the custodian of that, if that's making sense with what I'm saying.
It does. So a lot of times law firms you could keep stuff in trust where you can, if you are the recipient, you can go and they'll give you the seed phrase or the part of the seed phrase that they hold, so that way you can then transfer stuff in the case of like somebody's will, for instance.
Right.
Like if somebody dies and they've got $1 million in Bitcoin on their wallet, you better hope they have that in their will to pass that on to somebody in their family or whatever. So law firms is very common to have law firms doing trusts for seed phrases for crypto these days.
Right.
Cool. Oh, that's really good to hear. You don't hear that answer often either in the DeFi space all the time. So that's good. I like hearing that. Who else is, if you don't mind my asking, who else is on the multi-sig? And are they doxed or KYC'd or anything like that?
So there are there's one other, and we're adding another one on to the multi-sig. Neither one of them are doxed. Just the only one on this that is quote unquote doxed is going to be me. No one else needs to know who the other multi-sig holders are. It's for anonymity, and it's for the protection of longevity of the pulse. So we keep the multi-sig signers very how do I put this? Their identity to where it is not known for that reason, for safety and security.
Right. Like the most effective exploit out here in a multi-sig or getting somebody's seed phrase is generally the $5 wrench attack, where you go after them physically and say, give me,
Right.
sign this. And if they get the majority, yeah. So I understand that, that for security purposes. Now with you being doxxed, this being a registered company and everything else, like the onus is on you for accountability and making sure everything's above board in terms of the funds in those multi-sigs. So I'm assuming you did you've chosen good folks, hopefully, to be on that multi-sig with when you're the guy out here publicly with everything on the line. Yeah.
I would not pick individuals, whether the public knows them or not, or they know that I'm affiliated with the person or not, that I did not trust to handle a multi-sig wallet. And so, but let me put it this way. I do keep the multi-sig, like with everything I do, is very strategic to where they would not be the person that you would assume. Let's put it that way. Where they're not going to be someone I really interact with on a daily basis. Very security oriented. Let's put it that right there. That makes sense.
Yeah, it does. It does. Okay, good to know. All right, let me see. And we went over the smart contracts very thoroughly. Continuity plan. Will your trading bots do well, or would these bots be able to keep performing if the bear market were to continue for another year or two unexpectedly? So,
are you referring to the bear market and the fact of like crypto?
Well, I guess I'm thinking mainly of crypto, but since you guys are using indices and forex, you guys have spread that risk out pretty well. Then, let's say the stock market, though. Let's say the stock market, if it has a recession or something, would you guys be able to trade in a sideways or bear market scenario with your bots?
Yes, and that's where on the weekends where the set files come in. When I say we update the bots, if we didn't update the bots, they would be useless.
Right. Yeah.
And so that's why we go in and continually keep them updated and fresh.
So you guys adjust the strategies for certain bots for certain assets based on macro environment or market and market conditions.
Correct. Yes. And high overview, that would be a yes.
Okay. Well, good. That's good, because trading bots, as we said earlier, they're actually more manual than people would think to run successfully. So
right. Yeah, it is a constant. This is where it comes back to heavy expenses. Not heavy expenses, but you get what I'm saying, where we run a tight margin, because we do have to continually keep those updated and working properly.
Absolutely. Quants aren't cheap.
Nope.
At least when I was looking in that job market for a while, for a good quant, which is somebody who writes code for, essentially to trade, and manage, portfolios and stuff, and analyze financial data. So all right. I don't want to get off on a tangent there. I could go on forever about anything. So what do you think, Nick, is the biggest risk to participants in this company for pin holders in the Pulse DeFi? What's the biggest risk in your opinion?
The biggest risk, and which is not really a risk the way it's set up, because we keep the biggest risk, in my opinion, would be the prop firm itself going out But then again, we've mitigated the risk by spreading out the profits among the pin holders to where you're still receiving profits, even if your prop firm goes out or if your bot, which we haven't had this, hypothetically terminates your account. But again, we've mitigated that because you're pin holder on the contract. So that would be what I would say is the biggest, not the biggest. I mean, that would just be the risk that would stick out of my mind. But again, we've done everything that we can to mitigate risk across the board. So that's what I would think. It's
that prop firm
possibly
risk we talked about before.
Right, prop firm risk, and it's. But of course, we again beforehand we covered that it's specifically set to mitigate the risk just by the sheer business design of the company and the smart contract itself. So, yeah.
Okay. All right. Good to know. Now, I know at the end of this, I wanted to show how to get involved. And I am going to try to walk through the process myself without doxing all my private information. But so before I do that real quick, just a couple more questions about So where do you see the Pulse DeFi in 6 months from now? Where do you see this?
In 6 months, Wave 3 is already sold out based on the current trajectory. So, and the Nexus is rocking like no one's business, and meaning like no one's business, everyone's business, because everything is Nexus. But let's see, like my Dev Peter said, everything is Nexus. That's how we're gonna say that. Ecosystem's fully running, and we're continuing to expand and grow. That's where I see it in 6 months. We are having fun with this.
Yeah. All right, cool. So that was 6 months, right? Your Wave 3 sold out at this rate. You guys are strategizing, scaling, and just basically rocking and rolling. What about in a year? Where do you see this in a year?
Man, now a year is going to be, I think that's going to depend on where remember what I said, we get to like Wave 3 and we've crushed Wave 3. That's wrong connotation, but sold out a Wave. Yeah. Like could have picked a better word there, Nick. But still, the same vein right there is picking the prop firms and and that's what we're continually doing is doing our due diligence. And even while everyone is the beta test users are still running. And so, which means new prop firms are being explored, new trading bots that are run on like MP5, Trading View, and I was going to say Trade Station, but Trading View, you get what I'm saying. And are being developed and being deployed and testing out to make sure that, because even when we roll out with an MP5 version, that it opens up additional prop firms for us. So we're continually testing those out on our beta test users to see which then we could relay that over to, once we're comfortable, we'll expand out. So yeah, we're doing lots of stuff to stay ahead of that curve, even with pull, P-U-L-L, not P-O-O-L, pulling new tech in to expand our available prop firm liquidity pools. So yeah, going and blowing. And I'm sure because keep in mind that the price still continues to go up with every wave, eventually capping out. But you see what I'm saying is just constantly expanding not only our team, but the tech that we're using to make sure that we are staying on pace with growth.
Okay. All right. So in a year, you guys will be really just ramping up with the scaling efforts and rolling out development of new trading technology, the AI stuff that you guys have been working on, and all that good stuff, and expanding your prop firm relationships and access to more prop firm capital for pin holders. Now, where do you see the project in 3 years?
Man, okay. So now we're getting to some fun stuff. In 3 years, the team, we've actually been talking about bringing on or starting our own prop firm. I know that sounds like fanciful to some people, but whenever you think about business, it's, vertical integration.
Right.
So that would be part of that process would be where we had our own prop firm, which is used by our own bots, which is then that is like an overarching long-term projection where we had everything vertically integrated all together. So yeah, continue going, but it also increases profitability for the team by having its own prop firm. And I can see everyone saying now, Nick, that is the most asinine thing you've ever said. I was like, but we've already done the research and we've already looked at the dollar amount, and it is certainly feasible and easily attainable with the other VCs that we, venture capital company and the fund getting ready to roll out, all that kind of stuff. We've already ran the cost analysis on it, and it is well within our profit margin range to in that time frame to pick one up to integrate with the Pulse. So
Wow.
we're interested in So we have our eyes on not just thinking small, but scaling big and continuing to move forward. So of course we can't tell anyone to use that prop firm or which prop firm it may be. Do you see what I'm saying? Because that would be financial advice, and we're not financial advisors, nor can we provide any financial advice. Future predictions are past on past performance. You guys do what I'm saying. So yeah.
So okay, that's awesome. So in 3 years, you are hoping to essentially start your own prop trading firm using capital that you have built up in the company, as well as from VCs that are interested, and then allowing that to be an option for the pin holders and the trading bots. And in that way, not only do you earn the 20% subscription service fee, but you also would earn that 50% prop firm fee that first 21 days, then 30%, and then 20% after that, indefinitely, with only a 4% drawdown potential per day on that capital. If somebody were to bungle it or a bot were to bungle it, that's pretty awesome risk reward ratio for putting that much capital to use if you have that much. Because I know the more capital you have, sometimes it can be harder to make the same amount of gains consistently as you have more and more money. Otherwise, you just have infinite money. You run into scalability issues with that. So making your own prop firm is a great idea. That's super cool, man. I would love to see that.
That's the next that's the long-term growth strategy to keep everything moving in the way that we have predicted that we need to scale. Because where you see businesses fail is when they don't move in a forward manner, and anything is attainable. It's just, are you going to be opening your mind or have the mindset to grow there? I mean, my business coach, my mastermind coach, Kevin Bjorklund, just super awesome guy. I mean, he could go toe to toe with what is that guy? Tony, whatever.
Tony Robbins?
Yeah. He's just tall guy. Yeah. Okay.
Anthony Robbins, Tony Robbins. That guy is such a great speaker and just like a magical human being. Yeah.
So my mastermind coach, my business coach, just phenomenal guy, just brilliant. And so we walk through this. He and I go cold plunging every morning, and we walk through these processes of how to scale things out and how to do it. Keep your mindset, because what most people don't realize is business is all about mindset too. Not only is it networks, but it's mindset. Because the time that you start listening to someone say that you can't do it, or you're getting down in the weeds, that's when your growth slows. Right. But as long as you're keeping it up here and you're not getting all bungled up in the day in and day out of everything, your business grows like gangbusters. It's just constantly moving and just going forward. So 100%, prop-firm ownership is attainable. The only hurdle that we need to look at is regulatory, which doesn't appear to be too bad in the US for that. We just have to make sure on how it's presented, which that's typically everything that we do, is making sure that everything is properly registered. So,
right. Cool. So that's in 3 years, potentially that starts becoming realistic. Where do you see that where do you see the Pulse DeFi in 5 years?
I see it being, like we talked about, more AI shifted and expanding to different markets. Forex is, for people that don't know, Forex is currently a $6 trillion a day market. Greatly beats out the stock market and everything else. But at the same time, it is still on the Forex market completely. How do I put this? I mean, you said 6 years. Is that what you said, Alex?
5 years.
5 years. 5 years.
Yeah.
Okay, I was thinking the 6 year mark. 5 years would be that's going to be something fun, truly fun, because one of the things that is like a real heart's desire of mine is to do a nonprofit for teachers where we integrate this in to supplement salaries and things. And it's I haven't put pen to paper on anything, but it's one of those things where then you can really start seeing where teachers are underpaid, and truly, if you're wanting to make a difference, you start with kids, because that's the next generation, and teachers are the ones that have that influence, because they spend 8 to 10 hours a day with kids. But if whatever they are feeling gets translated to our kids, and so I mean, we have nonprofit thoughts on this as well. Once you get to that level, it's in 5 years, it's how do you make this even more accessible? And that's going to be the next challenge that we're really ready to tackle, is how do you make it accessible to people that truly do need it, but can't absolutely afford it. Yeah. And so it's not just about scaling. Eventually it's kind of like, okay, now we're at a level, how do we make it accessible to everyone? And still be able to grow and scale with that. Because again, there's a whole model, but yeah, great question. I love that 5 year mark. I'm looking forward to it, and going all the way there. We got plans all going there and beyond. So obviously by that time, it's going to be part of a massive ecosystem that we've got built out, and that we've got slated. And I'll be 45 then, and that'll be fun. Just in retrospect, this conversation, like, man, Alex, do you remember that day we did this AMA, and that, yeah. So yeah, take this AMA, burn it on a DVD, video, VHS cassette, a beta, video. So, and then set it over on the shelf right behind you. Like, okay, this is what Nicolin Decker. Okay. Yep. Today's date. Yeah. So
that's my YouTube channel. In 5 years, I'll be like, hey, you remember this video? I'll just send you the link. It'll still be there. Yeah. So
that's awesome. Like, it's like one of those Facebook timeline things. Like, you remember this day?
Yeah.
Yeah.
I'll be, hey, remember 3 years ago you said you're going to start a prop firm? Let's see. And if you do it, that'll be so cool.
Oh yeah.
And in 5 years, if you've got a nonprofit running in conjunction with this, and something that can help out teachers and other important, but often underpaid members of society,
right.
I think that'd be really a wonderful thing to do. And not only that, from a business standpoint, you could also potentially make donations to that to get additional tax benefits for the business, which can help you scale even more, cut down expenses while doing something good for society at the same time. Great strategy there. And hopefully at this point, I'm still going along for the ride as a pin holder, and that would be wonderful too. And I know I asked you about my, as a pin holder, about my perspective in 10 years, and you gave me a pretty great answer earlier on that. But where do you see the business in 10 years? I normally don't even ask this question because these projects out here and companies, some are very short-sighted, but you've got vision. Where do you see this in 10 years?
10 years. Honestly, at that point, with that juncture, it would probably be something along the lines where we are integrated with actual funds that are registered with the SEC or whatever it's called by then. It might be XYZ, might be who knows, but you get what I'm saying. Some registered agency where we are integrated with an actual fund to complement that specific fund, like whether it's a what is my mind going to here? Help me out here, Alex. My mind just went blank. My apologies. Like a fund where you see that
a hedge fund.
Yeah. I was thinking of a specific word. It'll come to me like a hedge fund. Okay. Where we are listed as kind of a. We have been talking about in the background,
like ETF.
We just had this
like a exchange traded fund, or
yeah, not so much that, but I guess it would be the one I'm thinking of is like a hedge fund. But yeah, that would be the long-term direction where we're going, is building out something. And again, there's pivots and growth. So what's here today might not even look similar to what the future looks like, but still have the core value behind it. So, 10 years down the road could look drastically different from today, which it's supposed to. So, that doesn't really answer your question, but at the same time, it does, considering I'm actually thinking that far.
Yeah, 10 years out. Well, I normally don't even ask that question because nobody ever has an answer. It's like, I don't know. I hope crypto's still around. Like, that's usually what I get.
I said, I don't know if the SEC will still be around. So, that's, yeah. So, but, I would think something like the way I'm seeing it is being integrated into a hedge fund to complement that.
Very cool. All right. Now I got another quick question, unrelated. So those are great answers, by the way. Normally I don't get that well thought out of answers for that section. You've got good vision. I love that you're a long-term thinker. You've got a growth mindset, which is very good in business. Now, is this accessible, the Pulse DeFi specifically, to people everywhere in the world, or is this only specific to the United States? What's the situation like? Can somebody in South America or India or Australia or the UK or wherever, could they participate in the Pulse DeFi just like somebody in the US like me?
Excellent question. So we actually have pen holders in the UK, South Africa, Australia, India, Thailand. We have pin holders all over the place. With that said, when they purchase a pin, if you're doing your due diligence, make sure the prop firm that you select does not have your country geo-restricted. For instance, FTMO in the past 2.5 weeks, geo-restricted the US. They grandfathered the current US citizens in, but not new onboarding customers. So using that as an example, but But so, yeah, we are a software company and we build out software and that's what we sell. And we are specifically, the only restriction would be on which prop firm allows you, if they will allow you that country that you reside in. It has to be you reside in, not your, not which country you're a citizen of. It's where you reside. It's how they geo-restrict it. We get that question come up quite a bit too.
So would that be determined during the KYC process with the prop firm?
Yeah.
And then also, would the IP address of the server of my trading bot, would that be geo-restricted from their services as well?
No, it is not geo-restricted from their services. Not that we have seen as of the date today, because they do not track it in that fashion. But your KYC documents, they will typically ask you like your driver's license, the simple utility bill, and then you sign the standard agreement that just says, I understand the drawdown limits of the prop firm. I understand the payout schedule, that kind of stuff. It's a standard agreement like that. Yeah. Okay. So that's typically what you see in those KYC docs.
I see. All right. Good to know. So if I were to sign up with FTMO, if that becomes an option in the future, I'm in the US. Right. I probably wouldn't be able to do it. But if somebody in the UK KYC for FTMO or another country that they are cool with, and they get approved, you don't foresee any issues using servers with IP addresses in the US, trading with their API or their system at all. That should be fine. And if it's not, would you guys pivot and spin up a data center in another country as well to run in those situations?
Yeah, that would be our responsibility, would be to find a solution as part of this subscription agreement, is to find a solution to make sure that it works. And so, good to know. Yeah, that's good. So yeah.
Yeah. Cool. That's great. Good answer there. Awesome. So basically anybody can participate in this anywhere in the world, as long as the prop firm that they choose during the sign up process allows their jurisdiction to participate with that prop firm. So if you are looking to sign up with the Pulse DeFi, just look up for your country or state or whatever, and make sure in the prop firm's terms of service that your location that you live in is good to go with them, and then you should be fine. But the Pulse DeFi, you don't restrict anybody on your end, any country. You guys are good to go with, right?
Right, because we custom build software, and it is not a software that is geo-restrictable. Is that a word? But it's not.
I accept it.
Yeah, you'll accept it. Okay, I figured you would, Alex. Yeah.
Yes. Oh, all right, great. That's good to know. I've got a wide audience. It's international. Awesome. I got folks that watch my channel from every country you could think of, and it's really cool. That's why I love DeFi. It opens up opportunities for people.
It does. All
over the world, and I'm glad that you built your business to also have that aspect to it. And yeah, so that's awesome. Now, I think I've asked almost everything I can. I could ask some more stuff, but at this point, I think from a new user perspective, I've thoroughly covered everything that is very pertinent. I think I've covered the value proposition. I think we've covered the risk reward profile. Is there anything, before I do this demo, is there anything else that you think we missed or that you would like to cover?
Yeah, let me cover this one last time. The way we have things set up for communication with the client is we have a Telegram channel that only sends out news. That is to prevent FUD. However, that does not mean that it by design we're not controlling a narrative, because we are opening up on our website, you can do one-to-one Calendly links with me, meaning you can have a face-to-face Zoom call. It is there to prevent FUD. And I just want to make sure that's clear. Some people misinterpret the fact that we don't have an open Telegram channel. I personally have never seen a good use case of an open Telegram channel. It creates too much hazards. Whether someone fishes for something or someone says something that is not accurate, it just seems to cause issues. So highly visible, that's what we are. This is 100% transparent. And in some contexts, it's rug proof because it's a one-off investment, not an investment, one-off purchase. A cell phone is an investment as well. I'm using that by comparison. That was kind of what I wanted to emphasize here. So,
okay, and I totally understand. I actually agree with you, and I think if somebody is interested in talking about this in a more public forum that is in general to DeFi, come to the YaBonks Discord server. All right. Discord.gg/YaBonks. Links in the description of my videos and everywhere else. And I will make a channel for the Pulse DeFi in my projects list there. And then I'll post all their pertinent information and links in there. And if anybody has any questions specific that they want to ask me or just talk about with other community members, throw them in there. It's a totally public forum. Anything goes. Just don't get too crazy with slander or death threats. You guys know how it is. My channel, my server is very chill. But
Good.
If somebody's in there just excited and wanting to chat about their position, like hit me up in there because I'll be like, holy cow! Did you see the last month's returns? Is this real life? No, I know. I don't want to try to like. I'm excited. All right. So again, I have a hard time concealing my excitement about this, even though it's 3:30 a.m. and we've been talking for almost 12 hours. I don't know when we even got on this call, but I am super excited about this. I'm going to be talking about it with my community, and also probably with Pell In and Pocket Aces. I know those guys, they seem pretty excited about it too. And you guys all seem like you're friends as well. In real life, I know you've met them all in person. So that's really cool. That's where I'm at. So anybody curious, I am actually going to go ahead and show you how to do this. Okay. So I am going to share my screen. It's so simple that it's really easy. Just go to thepulsedefi.ai and just click enter dApp. And it gives you a little disclaimer, you are now leaving. And it gives you blah, blah, blah. It's for legal purposes and your own safety, obviously. And then it brings you over to here. And this page, very simple. You just connect your DeFi wallet. I connected my MetaMask wallet. And all you do is put in your first name, last name, an email address, and an optional phone number. And it's $5,000 USDC on BSC on BNB Smart Chain. So just, if you've lasted this far in the video and you've been in DeFi, you know how to swap from whatever assets to USDC on Binance Smart Chain. If you don't, ask somebody in my server or watch my really old videos. You'll figure it out. But if you don't know how to do that, do your own research. It's not that hard, and you guys have made this so easy. I'm going to go ahead and wake up my my hardware wallet. I always use a cold wallet, you guys. And first thing is I'm going to approve the spending for construction. And if you've never done this before, because you're from traditional finance world, you're used to credit cards and PayPal and stuff. In DeFi on blockchain stuff, normally you have to approve the spending of a token in your wallet for whatever smart contract you're interacting with. So I'm going to go ahead and click approve. You guys can't see it, but it just popped up my MetaMask wallet, and it's asking me to approve my spending cap for my USDC. It already auto-populated $5,000. I'm going to go ahead and hit next. And it's going to cost me 5 cents in gas in BNB. No big deal. Then I'm going to approve it. I'm going to review my transaction on my hardware wallet. Hit accept. Very cool. It just came up with a little thing. A little, you couldn't see it because of our cameras on the screen. But it just said like approving the amount, blah, blah, blah. And it just basically told me what's happening. And then next, after that, you just click deposit amount. So I can double check in my MetaMask wallet. It looked like my approval was confirmed. So I'm going to go ahead and click deposit now. I'm excited. I'm excited, man. I've got goosebumps. All right. YOLO, here we go. All right. I just approved and hit accept on my wallet. And here it goes. So it deposited the amount. And
then click submit approved for approval.
Then I'm just going to double check my wallet too. It says it was confirmed. The USDC is gone from my wallet. So after you've deposited the $5,000, hit submit for approval. And it just says application submitted. Your bot construction application is pending approval. Please check back later. All right. Now, what now, Nick? What happens next?
All right. Now that you purchased a pin, so what the team does, they see that, hey, well, they probably won't see it at 3 a.m. Central Standard Time, but when they wake up, they will send you the purchase agreement and the user subscription. It's a simple jot form you can do on your phone, and it gets sent right back to the team, and they send you the onboarding packet from there. So simple as that.
I will be waiting bright and early, like checking my email, like it's ready, because I want to get my bot rolling as soon as possible, so I can start getting I can start getting some of those staking points, talking with the smart contract language, so I can get a portion of that first payout that's coming in approximately 2 weeks. You think, as we mentioned earlier, and that means I could potentially, if this takes like half a week to get my thing set up, then I could potentially get a week and a half worth of rewards and get that first payout if the timing goes right. Regardless, this thing will be working for hopefully the next 5 to 10 years, maybe longer.
Yeah.
If you do a great job running this business and everything goes smoothly, with regulatory stuff, whatever. But again, as we saw, you posted recently in the Telegram channel that Wave 1 had already done about 44% in that first month, which is $2,242, which is nuts. That is absolutely nuts. So even just 2 weeks of this running, if I get in on that first payout, that could potentially be almost $1,000 if everything keeps performing in the same fashion, which would be totally mind blowing. And I'm hoping that this thing just pays my mortgage payment off for the next 5 years. Heck, if it does it for the next year, this was a grand slam of a play. So, yeah, that's my opinion, everybody. So I'll keep you posted on my weekly live show how this goes. So you will know if I hop on my live show, I'm like, guys, guess what? Like, that means I probably just got a payout of some kind, and I'm excited to talk about it. So that's man, that was super easy. That literally took like a minute or less to do.
Yeah, it was very easy. That's how we designed it, was just to be very user friendly, and very much like what we talked about earlier. Pretty much everything we design is to keep ease of use in front. So we don't want to make it this complicated interface where people don't understand it. It's as simple as, hey, you enter the amount, enter in your name, your email address, you approve, deposit, and that apply. It's done. So
and that was
overall, yeah, that was it. So
and the next steps, I'm just waiting for your team to email me tomorrow with the documentation to fill out and and with the forms to set up my trading bot and everything. And then I pick my prop firm at that point and everything, and I go through the prop firm's KYC process. So I would need to then provide like my driver's license, probably a current utility bill with my home address on it, all that stuff that's typical of KYC processes. And if I get that all done in a timely fashion, hopefully this thing's up and running before the end of the week.
Yeah. And so just remember, just a high, like with your driver's license, make sure whatever utility bill you have matches your driver's license address.
Right.
Otherwise, it's not really a KYC for them. Yeah.
Right. And that's not a problem for me. I've covered everything at like more thoroughly than I can imagine. Nick, what do you think?
Yeah, I mean, I think this is a excellent addition to a portfolio. And I don't say this lightly, but considering the risk reward ratio on this, I truly like it the way it's been built out and the way it's set up, because it's not one that you've seen in the space before. It's a unique product. So that's the way I see it. And again, that's my opinion. But of course, again, I'm the one that built it. So don't know what to say about that.
I have never seen anything like this. I mean, I've seen prop firms and I've heard people using bots to do prop firm trading. But it's like they have bots that send them indicators when they need to make the trades manually on the prop firm system. And at that point, I'm like, that's still just like manually trading at that point.
Yeah, that's not the new version. Yeah, I know what you're talking about. Yeah.
And then if you want to get into high frequency trading of any kind, especially with a prop firm, like you said, the entry fee for that is prohibitive to almost any normal person. 20,000, 40,000, 50,000. So yeah, never seen anything like this in this space, especially with what you've got coming with the whole ecosystem, with that Nexus token, the Surge style token that's like a stable token that only goes up, kind of connecting everything and just feeding off that volume and growing.
Yes.
I think that's super cool. I'll definitely bring you on later to talk about what you're rolling out next in the ecosystem as it builds out. And yeah, man, I really appreciate all the time that you took to make this with me, Nick. I mean, seriously, we've probably put combined 15, 20 hours on video with each other from start to finish. Like, yeah. Like, so from my due diligence process, which we talked for hours then, all the way to now where we've talked for almost 12 hours straight. Seriously, that's a huge commitment to creating really informative content for, not only, your potential customers, but also for my audience that loves this stuff. Just the educational value alone of this video is super valuable. I mean, really,
yeah.
This is a very educational AMA.
Yeah, and that's why I am over the moon excited about just being here with you, Alex, because there's something about there's the hour-long AMAs, the 45-minute AMAs, but whenever it's like you have someone that dives in as deep as you do, not only does your community, are they able to understand what's going on, but also we're posting this to the website, the Pulse DeFi AI website, where people can go in and it's like, okay, now everyone has a greater understanding and it's a resource for them to tap into. And so absolutely 100%, I mean, this goes to being transparent, so everyone can see exactly what's going on. And if they have any issues, there's a Calendly link at the bottom. I don't understand something. You know what? I'm going to make an appointment with Nick and we'll get it hashed out. And then so it's simple as that.
Yeah, I love that. I mean, if anybody needs to talk with Nick, go to the Pulse DeFi.ai and scroll to the bottom and sign up to speak with him face to face, just like this on his Calendly calendar application. He's got time slots every single week for anybody to talk with him face to face. I love that. And Nick, where else can people find you? I know I said the Pulse DeFi.ai. Anywhere else you want to let people know where they can find you at?
Yeah, so you can, there is the fund.ventures. The website is up. The dApp is being finished out, should be out in March as well. So there's that. The Nexus token.com. You can find me there. You'll see another AI trading bot that we run, which is called algozone.ai. You'll find it there. And let's see, we are launching the vault here soon. We are then also with the Nexus token. The yield farm is coming out in March. So we are quite busy, and not busy as in like frivolous busy. We are quite productive. Productive was the word that went very fit into that sentence right there. So I am pretty much anywhere and everywhere that I can reach out to. You can also go to KingstoneInvestments.group, and that's one of the venture capital companies of mine. So yeah, you can find me anywhere.
That's amazing. You are quite the serial entrepreneur, and I'm glad you're out here building cool stuff in the DeFi space, because we need more of that from fully doxed people who build businesses out in the open and are trying to do really cool things in business and tech. So I'm honored you came on my show today, and you can find more. Also, I'll have a channel in discord.gg/YaBonks. Yeah, that's all I got, Nick. This was so much fun, man. I've really enjoyed talking with you so much today.
Absolutely.
Yeah.
Yeah, I've had a blast as well. And, it's, let me say something from the bottom of my heart. Your community is blessed to have you, Alex, truly.
Thank you.
And just the space in general.
Thanks, man.
You are unique and you are very appreciated. So I don't mean that in a positive way, like we discussed earlier. If I didn't say you were unique, that would not be a compliment, but it is. So
I really thank you, Nick. I really appreciate that. You also are unique. I remember earlier I said you are a very energetic and eccentric person, and I meant that in the highest form of compliment. Right. Because I think those are the type of folks that come up with the coolest stuff and make magic happen. So, like I said, it's been a pleasure talking with you, Nick. I can't wait to do this again, and I hope everybody really loves watching this video.
Absolutely.
Yeah. All right, everybody.
I'll talk to you soon, right? Yeah.
For everybody who made it this far, you're an absolute champ, and you know more about the Pulse DeFi than 99.999% of people in DeFi. So thanks for watching, everybody. Like the video, subscribe, all that good stuff, and I will see you on the next one. Thanks, Nick.
Thank you.